Good afternoon and good evening to the rest of you guys. We are back. It is episode 69, so we've got a lot in store for you guys. I'm your host, Q, and I'm joined by my co-host, Alex McShane. I have our producer, Chris, in the background somewhere, and we are joined today by our first guest, entrepreneur, Bitcoin investor, Bitcoin entrepreneur, Jay Gould. Jay, how are you doing today, man?
What's up, Q?
Thank you so much for joining us. I want to dive right in a little bit on what we were kind of talking about before we went live, on just sort of what your day-to-day looks like. You're not necessarily paying attention to price movement. You're not memeing the dips and making fun of Joe Rogers out there for not signing his bonus check. Shout out Joe for signing way too early. You're instead focused a lot more on the business development side of just the Bitcoin ecosystem. Talk to us a little bit about, like, what does that mean first off?
Yeah, I'm an investor, entrepreneur, 20 years, started several different companies, had a few exits, invested about 100 companies, internet companies, primarily, and some biotech and stuff too, but mostly just social, internet, marketplace kind of dynamic businesses. But I'm also invested in Bitcoin companies too. So I'm looking at tons of deal flow within the Bitcoin space and outside of it as well, just regular internet kind of stuff. A lot of my Bitcoin friends, like American HODL, he's like, yeah, what the hell would you want to invest in anything other than Bitcoin? It's like the fastest growing asset in the world. And recently we flipped him. Me and Jason Williams got him to start investing into Bitcoin companies. I think it's important for a few reasons. Number one, I think it's going to advance Bitcoin, a little bit further along. If you look at the shitcoin market, right? There's tons of venture capital that's going in there, and then the underlying assets that's living on top of these chains, it's benefiting from this, right? And so we're seeing over the last 4 or 5 years, whatever it's been, a tremendous amount of capital going into all these, as we know, shitcoin companies, right? And you get the Mark Andreessens of the world who raised $4 billion for a crypto fund. They don't have a Bitcoin only fund, right? I'm sure at some point they'll probably do that too. But they won't have the credibility in the space, right? But there are a bunch of funds out there that are primarily focused on that, like 1031 and Tremel and others. And I think it's great. And so, like, I'm participating in that as well now. I'm an investor in Swan. I didn't get in early, but I got in to participate and support Corey. I think what he's doing is fantastic. I think the brand that he's built is fantastic. And he clearly understands Bitcoin, right? So Swan, I'm in Pervious AI recently. I got into Bitcoin, the Bitcoin company, Zion, and a few others. And I'm just, that's what I do all day. So I'm just constantly looking at those types of deals. And I just think it's great to support the space. It's great to support the entrepreneurs. And I think that there needs to be stuff built on top of Bitcoin, right? Like they have on others. And by the way, it's another point that I'll make. I had Plan B on my show a few months ago. And I said, your model broke, right? Like the Plan B stock to flow model didn't work. Then I had Willy Woo on, and Willie was saying, he's like, I don't think it broke. He's like, I just don't think that he accounted for all the dilution within the crypto space. He goes, so if you look at the overall space, it's like at the time, it was $2 trillion. He goes, and if you take that, divide that by the number of issuance of Bitcoin, he's like, actually, he hit the target. He just didn't account for the dilution in the space. And so there's a lot of fragmentation out there. With all the confusion for people that are getting into this, they don't know what they should be doing. They're seeing it as like a flip, a Ponzi type of thing. But it all comes back to Bitcoin ultimately, as we know.
All right, before Alex and Chris chop my head off, I do want to explore a little bit of what you're talking about with the Web3 and all these other funds that are just investing in crypto at large versus you and your team being focused on Bitcoin centric. Like, obviously it's the Wild West when it comes to crypto. You can literally just say, oh, we're on a blockchain and therefore we qualify as some bullshit crypto, or here's my face on a token and here you go. Talk to us about how your team differentiates these and what are sort of those characteristics that separate Bitcoin from everything else that you're paying attention to.
Yeah, I'll give an example of a call I just had last week and a follow-up call yesterday. Don Stewart is a guy I'm working with. He's a Bitcoiner in the space. Has had an exit as an entrepreneur in just tech general, and is also a Bitcoiner and in investing in Bitcoin investments. And so I had a call with a company. I don't want to identify the company's name. They'll probably hear this and know that I'm talking about them. But they had a crypto project, right? And one of my friends, previous partner and a previous investor in one of my companies, a guy named Lou Kerner. Lou runs Blockchain Co-Investor. They have a SPAC, Blockchain Co-Investor Acquisition Corp, and introduced me to this startup, right? So I get on a call with these startup, and these guys are telling me that they're basically trying to fractionalize timeshares, right? Real estate timeshares. And I'm like, sounds interesting. So I listened to this. And at the end of the pitch, I said, well, why don't you just build this on top of Bitcoin? Right? Like why? And you know what it always comes down to, right? They want a pre-sale token. Let's be honest, right? It's always about a token, right? They're always trying to shitcoin. And the founder did not, first he's like the first call, he's like, nah, we don't want to do that. That's not our intent. And then we had a follow-up call and the other founders were on. He's like, no, yeah, we totally do. I was like, Jesus Christ. I was like, no, guys, I'm not doing that. I said, why don't you just build it on top of Bitcoin? There's got to be a way that you could do this as Bitcoin only. And ultimately we just couldn't get there. So I passed, but like, that's the kind of stuff that we're seeing. I think that there's people that just go out there and they see an opportunity. They're opportunists, right? They see an opportunity to go and create money out of thin air. And that's what they're doing, right? So they try to do these token sales and equity on top of it. It's bullshit for the most part, right? And if you're an investor, yes, I could make a lot of money doing that, but I refrain from that type of activity.
Jay, I'm going to chime in real quick. Also, doesn't that put you at risk technically? Like if you're an investor and, you have money investing in these companies and then, the SEC decides to crack down or another government agency, not advocating for this, but if they were saying you're basically investing in unregistered securities, they're going to go after not just the company, but you as an investor that put money into it. Is that true? Or I guess take me through that logic.
So Chris, what I'll tell you is that that's probably somewhat true, but investors are pretty sophisticated, right? So they have different structures and entities and offshore and all kinds of things to try to tap dance around these kind of things. And they have to have investment advisors that are technically managing things. And so there's a way to get around what you're saying, which in some ways it's like, what's the point of the regulation if you can get around it, right? It's kind of silly. It's rules are meant to be broken, I guess. But yeah, I mean, I don't think that those that are investing are probably going to be exposed, but there's a possibility. And I'm not a lawyer. I'm not a regulator. I have no idea. That's not why I don't do it. I don't do it because I just don't think it's the right thing to do. And I think I want to support the one thing I think that will truly come out on the other side of this.
I just got it. Oh, Alex, you muted.
So my follow-up would be, is Bitcoin the only ethical digital property from an investment standpoint?
You're in terms of like a cryptocurrency, is that what you're saying? Or are you just saying in general for a tech investment?
Yeah, well, I think both, because I think all the others end up being securities that are.
Well, if we're talking in digital assets, I think that's right. But I do invest in internet companies, right? And so like this company, I said, why don't you just have why do you need a blockchain? Like just have a database, right? As Jimmy Song would say, it's just a database, right? And they try to talk around it and all this jibbity job, right? It's a bunch of crap, right? It's always about the token. It is always about them creating money out of thin air. And that's what it always comes down to. When you really like peel the onion back, that's what it really is, but they try to say, no, the blockchain, it's decentralized. I'm like, no, it's really not, right? I have this thing, I call it the Frisbee test, the Frisbee disc test, right? Where I throw the D to somebody and then you throw the D back to me. So I give you the D question. Is it decentralized? You give me the answer. Is it immutable? You throw it back to me and you tell me why it is. Is it scarce? You throw it back. And then ultimately, is it censorship resistant? And you throw it back. And I got to tell you, other than Bitcoin, nobody's going to be able to go back and forth on this, right? It's not possible. So yeah, all the rest of it's bullshit.
So Jay, what I wanted to say is thank you for doing, I think, the most important thing, which is clearly explaining to all these bozos out there that everything that they try to do can and just should be built on top of Bitcoin if it's applicable and necessary to be on a blockchain, but not everything deserves that.
That's right.
Can you maybe expand on that thought of just like these ideas or concepts that come to you that maybe don't deserve to be on a blockchain or don't need to be on a blockchain?
Well, the company I was just saying is a great example. It's at top of mind. I was just talking to these guys, like 2 phone calls now to a follow up, they could just build a database. It could be on top of AWS. There's no reason why it has to be on top of another chain. And the only reason that they're really, truly doing that, in my opinion, is that they want to be able to do a token sale. That's the real reason why they're doing it. Anything else around what they're saying to me is just BS, in my opinion. So there's a lot of stuff like that. But there's some cool stuff out there. I think Impervious AI is really, really pretty cool. I was an investor in Brave, and it was another browser kind of thing. And I think these guys are going to crush it at Impervious, and it's like peer-to-peer, right? So what they're doing and building on top of Bitcoin, you could validate transactions as well on top of Bitcoin. There's a lot of things you can do on top of Bitcoin that I think makes a lot of sense. And there's a lot of stuff that doesn't need to be, right? Most stuff doesn't need to be.
I want to also talk about some of the maybe hurdles or headwinds that Bitcoin, and I hate to say it like this, but the broader crypto market has. We're seeing attacks from the EU against just Bitcoin in general. We're seeing regulatory attacks now in New York City. what are things that your team or you specifically are keeping an eye on that maybe impacts the way you're approaching these investments?
I leave that to the regulators, but we also have some friends like, I'm sure you guys know, CJ and his team with BTC, right? Bitcoin Today Coalition and others, Jason Brett and Becca was on that. There was a bunch of people we know that we all kind of met on Clubhouse, by the way, which is really interesting. And it kind of just evolved into them kind of, everybody finds their own way with this kind of stuff. And they went down that path, right? So happy to support them any way I can, but it's not something I'm focused on. And I don't really necessarily look at like I said before, I don't necessarily look at it from a regulatory perspective. I look at it from an ethics perspective and what I know is the right thing and what is not the right thing to do. And does it need to be on top of a blockchain, like you said before?
No, that makes sense. I'm kind of curious what you're seeing out of the Lightning Network in particular right now. We've seen a lot of stuff and a lot of new businesses sort of emerge as ways to interact or incorporate the Lightning Network as layer 2 and build businesses on top of that. What are your just initial thoughts? I mean, we saw Jack Mallers do an incredible announcement to really catapult, I think, the Lightning Network. What are you seeing? What are you paying attention to in that?
Well, there's some folks are building stuff that is like gaming on top of Bitcoin with Lightning and the layer 3, as they're calling it layer 3, which is funny. Jeff Booth just raised his fund with Preston and Lynn as advisors to it. Really interesting what they're going to be doing over there. Payments could be on top of it as well using Lightning, obviously. With Jack Mile, others in that space. Financial apps potentially could be on top of it. There's a lot of different sectors and stuff that could come through that would be interesting and would be a good use case.
What about Twitter?
Social. Yeah. Social is another thing, right? Yeah. It's possible, right? I mean, people are like, I don't know, man, about you guys, but like Elon, I think it was Elon or maybe no, it was Michael Saylor that was saying like, maybe you could validate yourself and get your blue check mark and all this kind of stuff. And then people freak out. They're like, oh my God, well, you can't believe you want to pay and KYC. And I'm like, yeah, but how else do you validate? This is a perfect way to validate, right? Like I thought it was a great suggestion, and I'm not sure why people always push back on paying for something. It's like you're either paying for it with your credit card or you're paying for it in another way. So you choose.
Absolutely. There's that old saying of, if you're not paying anything, you're probably the customer.
You are the product. That's right.
You are the product. Thank you for fixing that.
Yeah.
Talk to us a little bit too, just about like, how has the development of businesses and technology around Bitcoin changed over your time actually paying attention to Bitcoin and your time investing in more traditional tech versus what you're now investing in and what you're looking at? What are the similarities there? What are the differences?
Well, I would say the one thing is most of the Bitcoin companies and the founders of Bitcoin companies that I have been experiencing is they don't have a lot of experience, right? They're great Bitcoiners. They're true Bitcoiners. That's the great part, right? But a lot of them, like I'm seeing high valuations, which are a little off the charts in some cases, little disconnected from what I've seen in traditional investing. And I think it's because there's a small audience of Bitcoin only companies and a large pool of capital that wants to get into them. So it's driving prices up and valuations and expectations. But you got to meet those expectations. So if you're going to raise capital, and I guess the way to think about it is every time you raise capital at a certain valuation, you better make sure that you have enough growth through your milestones for the next round to go up, because you have a down round, it's like a death spiral for these companies. So from a perspective of like the founders themselves, they just need a little more, I think, guidance in that sense. They're a little green maybe in terms of like startup experience. Not all of them, but I've seen a lot of that, and there's some companies that just, I don't know if they'll be around in the next 5 years, right? When you start to look under the hood like that. And then also very specific. Sometimes they're very, very, very specific. I met with a different company the other day and I thought it was really interesting. Let me tell you one story. So I invested in a company, don't want to say the name because I'm not sure they're ready to go out there, but it's insurance, right? The Bitcoin insurance. Really interesting, right? But one of the main functions that they built, which they built in like 2 days, was the function of this entire business. So sometimes even in the web 2.0 space, you build a product, but it's really just a feature, right? So you got to be careful that you're not just building a feature, you're building a company. And do you think you can really scale? I asked the guy a very simple question, which I have, I ask all companies this, which I have this model, which I call DSD: differentiation, scalability, defensibility. You got to pass that. You got to get check marks on all 3 of these. Otherwise, if it's differentiated, that's great. Okay, it's cool. How do you intend to scale? Look at the founders. Do you think they're capable of doing that? Whatever their go-to-market strategy is, customer acquisition, whatever that is, right? Depending on the type of company. And if you get there, ultimately, is it defensible? Did you build some kind of inherent moat? So it's basically, what's the barrier to entry for other competitors once you start? And what's the barrier to exit for the users, right? If it's high, it's good, right? He didn't have a barrier to exit. He's like, well, I think if we get there first, we'll have the best brand. I was like, okay, we got to work on that, buddy. You got to figure that. And by the way, he raised millions of dollars already, which tells you that even the Bitcoin investors aren't thinking about things properly. So it's really an interesting space. It's very, very new, very young.
How much do you account for like these high valuations in Bitcoin related companies to be like, I know you've touched on the fact that like, hey, there's a lot of money that wants to be in this space, but in the broader private equity markets, we've seen over the last 2 years, like valuations just drive up higher and higher. And then now we've seen over the last few months, especially the day of reckoning, and these valuations are not getting validated and new money is coming in at lower valuations. How much of this is a direct correlation that you're seeing, or how much of this is just, hey, there is just this much money in Bitcoin with a lot of new people who just don't know what they're doing?
Yeah, I don't think it's always just the founder's fault. If you're a founder, you should take the highest valuation you could. I mean, it's really kind of the investor's fault for not, really doing their job, in my opinion, for what they believe that the next round could be priced at. So in some ways, it's really the investor's fault. The entrepreneur is doing the best that he can to try to get the highest valuation and the least dilution, right? But you also have to be cognizant of what might be coming up the road, right? But a lot of it's not even anybody's fault other than probably the Federal Reserve, right? Everything is just exploding. I could tell you, like in the mid 2000s, there was a handful of companies, probably less than 10, that had $1 billion valuation in the private markets. If you look at like CB Insights and stuff today, there's like 1,000+ internet companies that are private worth over $1 billion. I mean, it's just a direct correlation as to what they're doing with the money printer, so to speak, and monetary policy, I think.
No, absolutely. I'm curious now, and I want to give you the opportunity to touch on like some of the other types of businesses that you're exploring, and maybe what you're seeing in those type of deals that just differ as far as the dealings in Bitcoin related companies.
Like I said, there's a variety of different sectors and verticals that you look at. I mean, there's not that many things that could probably be built. Like there's infinite numbers of things that could be built, right? Do they all need to be on top of Bitcoin, as we said earlier? So like the kind of the categories to think about is like social, financial, payments, gaming. I don't even know. Podcasting, maybe. I don't know. There's a lot of things that you could do on top of Bitcoin, and there's a lot of things that you don't need to do on top of Bitcoin. So I don't know exactly what you want me to just kind of touch on any further than that. I mean,
no, I'm more looking
verticals.
Let's separate from Bitcoin for a moment, because I know that you also invest in just tech and biomed and stuff. What do those type of deals look like in relation to the deals that you're making in Bitcoin companies? How hands-on are you dealing with these type of founders who maybe have a little bit more experience? Maybe you have other types of investors coming in as well versus a Bitcoin-centric ecosystem that's really building up these companies.
Yeah, I'll give you an example. It's one of my best investments that I have right now. It's a private company. It's called Rumby, RUMBY. The founder is this guy, Ben Canty, great guy, sold his last company for about 30 million bucks. So he passes the test of a founder with prior experience, established history, all that. Came to me with this idea a few years ago. I was an investor in rover.com when it was called Dog Vacay, coming out of Science Inc. I was one of the first investors back in the day. So it's a marketplace type of business. I love marketplaces because if you kick ass in a marketplace, you basically build a monopoly, right? And so he reached out because I've invested in those types of companies. There's a few others that I invested in that were marketplace businesses too. In fact, all the companies I ever built were basically marketplace, supply demand type of businesses, So he reached out and he's done phenomenally well. This is a kind of business that doesn't need to be there's nothing it relates to Bitcoin in any way, right? But there is a need for it, right? It's an on-demand Uber for blank, right? In this case, laundry and dry cleaning. But yeah, I mean, so like I look at all types of deals and I invest in stuff that's outside of this space because there's infinite numbers of things that you could invest in that don't have to necessarily be in Bitcoin. Now, from my Bitcoin friends, they're like, why would you make investments outside of space? I can tell you this, when I invested in that company, it did like $3,000 in monthly revenue. This month he's doing over $3 million in monthly revenue. It's like 2 years later, outpacing the growth of Bitcoin. Right. But you put all your money in that. It's a crapshoot. You don't know if it'll work. Right.
So in terms of marketplaces that are actually built on Bitcoin and don't have a lot of exposure right now, not a lot of liquidity in them, have you ever looked at the Bitcoin NFT community?
like Rare Pepes or
Yeah, just like
City. Yeah.
Yeah, stuff like that.
I did actually. I looked at Scarce. I, I I passed on that deal. Jason did that deal, Jason Williams and a few of my friends, Brad Mills and others. I just passed because I just didn't think that, I don't know. You just have to have a feel for it. And I just wasn't feeling it. I hope it works. I'm not saying I think it's not going to work. I just wasn't getting it. It just didn't feel like it was going to make it, so to speak. And it probably will, right? I passed on a lot of shit, dude. I passed on Kraken in December of 2013, guys. So it's not like I'm the oracle of making the right decision all the time. I met Ed Williams at a party years ago. And I think it was like November, December of 2006. And he told me about Twitter. I'm like, this is a stupid idea. Then the iPhone came out like 6 months later. I was like, okay, I think I understand what he's trying to do now, but these entrepreneurs, sometimes they have a vision that I can't even see, right? That's why they're great. And frankly, he probably does too. And I might not be seeing that, but I think that there's a potential that could be huge, because if he gets there, it's a marketplace business, right? He'll have the supply and the demand. It will be just perpetual growth, but it's like OpenSea for Bitcoin NFTs, basically,
Yeah, scarcity is one version of that, but it's always curious to me that they I guess they have all the VC funding, that Ethereum winds up with all these crazy NFTs. Like, I think we can all agree that they're here to stay. I'm not arguing whether or not they're good, but
yeah,
there's clearly a demand for them.
No doubt. I mean, this is the other thing we talk about too, my friends, and they're like, oh, it's going to zero. I'm like, bro, it ain't going to zero. You don't see something get the $5 billion in monthly transaction volume and go to zero. It's not going to zero, right? This is a real thing. I actually think that NFTs, I have no problem with NFTs personally. I think Corey from Swan, Corey Clipson, he said it best. He's like, NFTs are not the enemy of Bitcoin. I agree with him 100% on that. It's like, this is a real thing. It's probably going to morph away from JPEGs. I certainly hope so, because that's just pure speculation, into maybe like skins inside games, and people are trading that and all this kind of stuff, right? Like in the metaverse, as they call it, or basically like they're all like Second Life and stuff, right? So like all that kind of stuff, I can see that evolving. I don't know if it's going to be Meta, Facebook, right? Or somebody else that owns that. Somebody will, but there's going to be an ecosystem built around that. And it's going to be a multi-$100 billion, if not trillion plus industry, I'm sure, over time, right? If you kind of project out. I'm just not investing in that stuff, but I'm not saying that you can't make a lot of money doing it. I have a friend that made a ton of money doing NFTs. He got in on the drop for Bored Apes, and he has over 100 of them still. My buddy John Gilardi, shout out to John. Right? He's crushing it in NFTs, right? But it's highly speculative, and I look at it like what they're currently doing, the current version of NFTs. I view it like almost like fantasy football. There's strategy, skill, and luck involved, right? If you understand how to play that game, I think you do really well. Most people are going to get their faces ripped off. They don't know what they're doing. They don't understand how to go through rarity tools and check out all the different rarities and how to get the drops. It's a diversification play. You need a lot of capital if you're going to play trading NFTs. If you're like a trader on that, you need a lot of capital because you got to diversify in something like that. So if the average person's like, yeah, man, I'm going to go buy one of these things for like fucking 10 grand. It's like, you're going to get your face ripped off. Like, that's not the way to play that game. If you got 10 grand, go buy Bitcoin. If you got $1 million and you're willing to lose it all, go play in the NFT space. You might be able to have some fun, right? And maybe you'll get lucky.
So quick, sorry, Q. I just want to do, while we're on this beat, just a quick follow up. In terms of physical art, were you ever an investor of, real art, stuff like that?
No, I'm not into that. But Jason, we talked about Jason. He is, right?
Mm-hmm.
And he's got real art. Ferocious, right? He bought some of Ferocious work.
Yeah.
Pretty cool shit too, man. I mean, the physical stuff's really cool. The digital stuff, I don't know how much value it'll hold over time. Maybe it will. I don't know. I'm not here to say it will or won't. It probably will, right? Because it becomes like you become a brand, right? You become the next Picasso of today. And maybe Ferocious is that, right? It's quite possible. There's a bunch of stuff that came out that was really cool. But there's just like my buddy John, he has 55,000 NFTs in his wallets, and he has like hundreds of wallets, right? I mean, dude, it's a whole different ball game, man. His life is just glued to the screen. It looks like he has a day trading environment with all these screens and stuff. They're stacked on top of each other. It's like, I don't think people realize what the winners are doing in this space, right? If they only saw John's space, they'd run the other way because he's there to take your money.
I mean, I kind of want to keep going down this rabbit hole with you for a little bit. I love the analogy of likening NFT trading and investing to that of fantasy football. I've written papers on how investing and trading in the stock market is literally just fantasy football all over again. Yeah. So I do see that correlation in that explanation. I personally think the technology behind NFTs are great. And to your point, like, let's stop using JPEGs, because I just love trolling everyone and right clicking and saving your NFT, and I'm posting it somewhere else. That it's me doing it, just so you know. If you need to send a cease and desist letter, send it to, I guess.
By the way, FYI, I can't say who the people are that are talking about this, but there's going to be a company that is going to enforce the copyrights on those NFTs. That's crazy. They're going to be suing everybody. So that's a whole nother thing that's going to happen, and it's coming.
Good luck suing the whole world.
Exactly. But they will. It's just like like a patent troll, right? They just pick off the individuals that they want to go after, usually a whale or something like that, right? They'll just go after people who have money for settlements. But I mean, it's a thing, you know?
I want to play a quick lightning round game with you, Jay, where I'm going to throw out just like ideas like ticket sales. And does something like that belong on a blockchain? So we'll start right there. Ticket sales.
I could see it happening. I don't know if I can't be the one to decide what does belong or what doesn't, but could it happen? Course. Yeah, for sure. I think that's something that makes sense with NFTs and stuff, you know, and you could build that on top of Bitcoin. Yeah.
What about actual deeds and more, like for the house, not a virtual house?
Yeah. See, this is the thing, right? This is the Oracle problem in some ways. And you could say the same for the other, but the actual asset itself at that point could be like the token itself, you know, on your phone. That could be it. I mean, the problem is, how do you enforce, right? With a contract like that, if you're having an issue, you're gonna have to go through the legal system anyway. So I don't see how you could do it, and I'm sure they will, right? And I'm sure it's happening, right? But I mean, doesn't theoretically make a lot of sense.
What about, and I'm stealing this one from Reddit, specifically Wall Street Bets, where some kids apparently really like the idea of introducing stocks onto the blockchain. What are your thoughts there?
I think you probably could do that, right? You know, I think you probably could do that. I don't know that, like, again, it's all about enforcement. At the end of the day, it's the enforcement if there's violations and stuff, right? Because then you have to go back through the legal system. But in terms of like efficiencies and speed and stuff like that, it's basically just database, right?
And what about like,
by the way, sorry, one more point on follow up on the stocks, because I was one of the people that said when the GameStop thing happened that it would be great if they had blockchain, primarily for the transparency of it, right? Because there's no transparency what was happening there. So having transparency and understanding what's happening while it's happening, I think would maybe have prevented something like that, or at least exposed it, you know?
Fair. I mean, I just think the entire stock market is a nice little casino that
undoubtedly, right? Q, undoubtedly. But like, here's the thing. We were all in, even as it was happening with that. And I'm friends with this guy, Howard Lindzon. Howard is Social Leverage. He's the GP over at Social Leverage. And then the founder of StockTwitch. You guys probably heard of that. And he was one of the first investors in Robinhood. He put $1 million in, it grew to $100 million plus, had fantastic investment. He didn't see that coming, right? And then as this all started to happen and unfold, we still didn't know what was going on. Like, who was doing what, who was helping who, like that whole thing with Citadel was like, wait, what? So maybe the blockchain would expose where the money flow is happening and what's, you know, because it's all transparent. Maybe, I don't know.
No, it's fair. I mean, there's just, in that, to strengthen your argument, I think there's so much insider information that if you sort of are in that club, you get access to, but like none of us here, maybe you do, Jay. And if you do, feel free to slip us some of that intel, but like, I don't, when I go on my E-Trade account to make some trades.
I got no info.
One more that I want to throw out, or a couple more, curriculums, education, introducing that to the blockchain. Do you think that's a viable?
I don't know how that, you'd have to explain to me what you mean and how that would make sense for that. But why not just do what they're doing at Khan and everywhere else, you know? And Udemy.
This follow-up, I think, will help really paint the picture. Introducing books or newspapers onto the blockchain. What are your thoughts there? Does that belong there?
But how are you doing that? You're just associating the hash to the book? Like, I don't quite understand. I mean, it's like an NFT at that point, right?
No, it would be exactly what you've described. Like each book would have its own sort of block.
It's like an ISB number instead. It's the hash, right? Yeah,
exactly. And then that way,
there's no. You could market it, but all that stuff would be better on a database.
Yeah, it's basically what you're saying to me is database, right? All this is just database.
That's the point of the game, man. Does it belong on a blockchain or not?
The point is,
I'm not saying that I support these.
I know you're not. I know you're not.
Just
what I'm saying is on the financial stuff, it totally makes sense from the transparency perspective because there's no manipulation potentially, right? And from that point, it's immutable. You can't, you can't screw around and change the ledger, right? So from that perspective, the flow of funds and seeing where the money's going and coming, there might be some benefits to that. Now, Jimmy Song will be in my ear going, "What are you fucking talking about?" No, it doesn't need to be on the blockchain. So I'm not like 100% with it
when he comes on.
Dude, Jimmy's going to be like, nothing belongs on a blockchain. Only Bitcoin. It's the only thing. And maybe he's right.
Um, I'm gonna set you up to either look like a dope Bitcoiner or you might get ripped apart. But like, is there a different side project or altcoin that you genuinely like are curious about? Or like,
No.
All right, King of Bitcoin lives on. Talk to us a little bit now about just sort of we've briefly touched on the public markets. We've talked a little bit about sort of the Fed's impact in the private markets and valuations. I love asking this question. I've been asked by some people to literally not ask them this question anymore. The NASDAQ and the Bitcoin are so correlated right now. NASDAQ 100 over 90%. Talk to us a little bit about what your thoughts are on why this correlation is happening.
Why it's happening? I think it's viewed as a risk on asset, right? So I think Michael Saylor, heard him on CNBC yesterday morning. He actually said it best. He said there's three types of folks that own Bitcoin today. There's the maximalists, there's the technocrats, and there's the traders. He goes, and unfortunately for all of us, the traders are the ones that are moving it, because the other two, for the most part, we're not trading, we're just hodling, right? So the movement and the price action are the traders. These are the Wall Street folks that believe that this is a risk on asset. So when the other risk on assets are going up and down, then they're trading this as well for whatever reason. That's how they're trading it. And they're trading it based on volatility for the most part. So it's a volatility trade for them. So that's what's really mostly why I think it's happening. I think probably the follow-up question is, when do you think you see that not happening or decoupling? I would say that the decouple on that is probably going to be when you get it into more people's hands, right? So Bruce Fenton, who's running for Senate, right? We all know Bruce. Bruce, great guy. Mm-hmm. Bruce was on Clubhouse a couple weeks ago, and he was like, I don't know what the Fed's doing. Like, why not the Fed? Gensler, right? He's like, I don't know what Gensler's doing over at the SEC. He's like, why hasn't he approved this? It's like, it's so ridiculous. And our close friend, my buddy, Joe Carlos Soller, he's like, what are you, crazy? He's like, this is great. I don't want it there. And it's like, well, why don't we want an ETF? Scratching my head, and I'm trying to think, I'm like, Joe's way smarter than me. So I'm like, maybe he's onto something here. So I was trying to figure it out. And he's saying, because I think it's bad for people to get introduced to Bitcoin through a custodial account. They're not really understanding Bitcoin. They don't have self-sovereignty, and they're not holding on to their own Bitcoin and their own keys, et cetera. Okay, I understand that. We said, but what about the number go up? He goes, fuck number go up. I don't care if number goes up. Eventually it will go up. And I'm like, okay, so here's the problem, in my opinion, humbly, right? What the fuck do I know? My opinion is that the estimate is that 100 million people, I think, roughly have Bitcoin, right? And entities, 100 million is what they estimate. There's been 19 million full Bitcoins issued, right? So there's a high concentration, because when you look at the number of people that have a net worth above $10,000, it's like 2.5 billion people globally out of almost 8 billion people, right? It's pretty small. It's something like 4% of the people that could own Bitcoin, right? And it's really concentrated at the top, as we all know, just like all wealth is, right? So you figure you have like 50 to 60 million people that have a net worth above $1 million, and there's about 500 to 600 million people that have a net worth between 100,000 and $1 million, and then the rest of them have a $10,000 to $100,000 net worth, right? So there's a concentration of about 4%, unfortunately, for that. And then the bottom, I think it's like the top 10% of the wealthiest people in the world own something like 85% of the assets in the world. And the bottom 50% of the wealth in the world is owned by, the bottom 50% only owns 1%. This is just globally, not Bitcoin, I'm saying, right? Just global assets, right? Which is around 500 trillion today. So my thing is, I think you're going to see the small concentration of holders of Bitcoin distributing their Bitcoin in the future when they finally think it makes sense to sell their Bitcoin. And they ain't selling it, if you're smart, at $40,000, guys, right? So you're not going to see a distribution into the people's hands. How are you going to see it? Number has to go up. Number goes up. And when that goes up, it's about expected return moving forward as an investor holding onto an asset. Now, I debate this with Bitcoin Tino all the time. We talk on the phone all the time and stuff. He doesn't agree with me on this, and a lot of people don't. But I believe that you're going to encourage, it's going to be more encouraging to people to say, I can invest in some other type of asset that will have future expected returns better than what I think Bitcoin will be. How do we get there? The way I look at it is, you pull out a compound, I don't have it in front of me, but you pull out a compound interest calculator, you take the current value of Bitcoin, and then whatever you think it's going to perform at moving forward, right? We have $500 trillion in assets. So you'd have to have the other assets like leaving and flowing out of those assets into this asset. So we have what like around 1 trillion-ish, roughly 800 billion to 1 trillion,
just
right?
a little under that.
Yeah, we'll be back. But say it's 1 trillion out of the 500. That's a pretty small percentage actually of global asset value. It's really like a blip in the radar actually for anybody who's really looking. But like for that to really to have, so that basically means we have like I don't know what you think the future expected return is, but Saylor said he thinks it's around 10 million or so, right? Some people think it's 5, 10. Some people think it's going to be all of the global asset, which makes no sense. There's utility value to assets, right? So let's say it's $200 trillion in the future. You have a 200x in front of you at 1 trillion, right? So why would you sell your Bitcoin? You're an idiot to sell your Bitcoin if you think that that's what the future value is in your lifetime, right? But if it goes from 40,000 to $1 million and you think it's going to go to 5, you only have a 500% growth in the future. So what's the future compounded growth? And then you have to compare that to other opportunities you may have with your money. And that's when you'll start seeing it being more distributed out. So I think when you get more hands on Bitcoin over time, you'll see less volatility in Bitcoin as well, right? And I think you see a decoupling at that point from the NASDAQ. I think people understand it's a store of value at that point.
I want to get one clarifying point. When we're talking about getting into the hands of more people, are you then talking about just like the total Bitcoin users, i.e. like total wallets expanding, or are you talking about expanding or taking away from sort of that top 1% of holders and their total value and having that more spread evenly across all people of different net worths?
Yeah, what I'm saying is currently, right? And I don't know within that 100 million, I wasn't qualifying what bracket they're in, right? So I'm not saying that of the 100 million, you know, if there's 100 million, just FYI, there's only 50 million millionaires, right? 60 million millionaires, something like that. So I don't think most of the millionaires own Bitcoin at this point, right? There's not enough Bitcoin, by the way. We all say this all the time. There's not enough Bitcoin for one full Bitcoin to go to every millionaire, right? So by the way, if you're a millionaire, you need to get your hands on a full Bitcoin now, okay? Because you're going to fuck up, okay? I tell this to my friends that still don't own Bitcoin. Like, I don't need to own Bitcoin. I'm like, someday you will, and you'll wish you had some, right? That you would, because you'll have to buy it at the higher price in the future, right? So what I'm saying is for the volatility to smooth and to decouple from the NASDAQ or risk on assets, I think it's got to get it to more people's hands and understand that this is a reserve asset that they need to have, right? Rather than sitting in cash and being debased, right? We understand that argument. People aren't doing it yet. And I think mostly because it's not being sold, and that needs to be number go up. And I think one of the ways the number goes up faster is an ETF potentially, right? That might be one way. I don't know. There could be some other ways to do that. There could be ways for a number to go up without distributing it too. There could be things that are built on top of Bitcoin that can lock up Bitcoin, takes it out of the supply out of the market, which obviously less supply in the market and more demand, increasing demand, the number will go up too. But over time, you will be encouraged to want to sell your Bitcoin based on what you believe that expected return, future expected return is on your asset.
Yeah, I think it's very interesting too, because I think while we know number goes up, and I'd say we're all kind of hardened Bitcoiners, or at least Bitcoiners in my mind, I still think that Wall Street and that group are still going to try and play games with rehypothecating Bitcoin, or, you know, basically taking out leverage loans and getting out over their skis, or, you know, over their head in water, I guess. So while I do see it smoothing out over time, I think we still got a bunch more bumps in the road between now and then. I guess, do you see that, Jay, with like institutions with trying to, you know, they get a bunch of Bitcoin and then we're going to take out a loan that at a risky loan to value, or at least that's what I see as. I guess, what are your thoughts on that?
For sure. I mean, one of the things that's happening right now is that they get levered and then it drops down a couple percentage points and they have to unload because of the leverage, right? So yeah, there's no question. The question is, if you can get the number of the value of Bitcoin distributed to more people, they have less of an impact when that happens. So right now there's a high concentration. Traders on Wall Street are like manipulating and trading, and they're impacting because they're in the float, and most people are just sitting, and you don't impact the price on a day-to-day basis if you're just sitting on it. So it's really just what's happening in the float.
Yeah, that makes sense. Q, I'll send it back to you.
Yeah, I'm genuinely curious. Like, when was the last time you actually checked the price of Bitcoin?
I check it every day. I know Jason piped it. I don't check Bitcoin price. I check it every day. I'm not checking it all the time. I don't even know what it is today. I directionally just watch it, and I'm like, where is it going directionally? I have no intent on selling it. I have no limit orders to sell. I have no limit orders to buy. I own Bitcoin. I've had Bitcoin for a while. I sit on it. I'm not a DCA. I had money, so I went in with money, you know. So I'm not dollar cost averaging. I don't have a job, you know. I'm not like doing it on a weekly basis or something like that. You know, I do watch it though. I mean, you gotta watch it, right? Shit, it's fucking a lot of my net worth is in there, so I am watching it. I'm just not hawking it all day long.
Fair. Talk to us a little bit though about just sort of like most people that we talk to, all three of us included, we DCA on a regular basis. Like, talk to us a little bit about like the risk allocation of taking a lump sum and going into Bitcoin, and how you calculated that out.
Yeah, there was a guy on, if you guys watch, I used to watch CNBC years ago and I was trading stocks and stuff, and downtown Josh Brown, I think he calls himself, right? So he's, I can't remember the name of his firm, but he's at a wealth management firm, and they did an analysis on this. The guy that works for him did an analysis, whether there was like a study and whether or not dollar cost averaging or DCA makes more sense. It was something like, and this is equity markets, this is not Bitcoin, right? It's something like 90 something % of the time DCA beats it. The funny thing is, you don't want to, I think it was 95% of the time. Yeah. I'll send it to you guys afterwards. It's like 95% of the time, lump sum beats dollar cost averaging. It makes sense because we have inflation and markets just go up over time. So if you're dollar cost averaging, you're going to have a higher cost over time. But so if you come into money, it probably makes sense, in my opinion, and I'm not giving financial advice, but what I would probably do is I would put half the money in as a lump sum and then hedge my bet on that by DCing the other half for say 5 years or something like that. And you'll get a smoothed out price. And if you have a downturn for 5 years, if there's a possibility that we have some kind of a crazy drought, like 17 all into 20 kind of, yeah, you might get a better price on the other half. And if you put half of it in at like 17, right, that sucks. You're at 18,000, but then you go all the way down to like $3,800 all the way to 2019. It's like, 2020 rather. And so you got a really good, maybe your average cost drops down to like 9,000 over time. And then also if you're dollar cost averaging and you see dips, you should be going a little bit heavier on those dips. I always think that makes more sense, but I've never really been a dollar cost average. I've had windfalls in to make my wealth, like I believe you create wealth through leverage and equity, right? That's, and luck. So there's a little bit of luck in life too. But like you got to have leverage, right? And some equity. And when I mean leverage, I don't mean leverage by borrowing money. I mean, you have to have leverage with how you maybe raise capital from people. You don't have to necessarily borrow money like from a bank account or second mortgage your house to buy Bitcoin. I'm not in the camp that I think people should be doing that. I know Michael Saylor's doing that. As he said to Scaramucci recently, he's like, you're not long enough, Smooch, which I thought was a great pause line. he goes, I'm long Bitcoin. He goes, you're not long enough. And then he goes, I'm 500%, man.
So if we're looking now, I mean, we're about 2 years exactly. If block time remains an average of 10 minutes, we're 2 years out from the halving. So what do you think the rest of this market will bring until the next halving?
I'm not a predictor either, so I can't tell you. I mean, who knows, right? I think its number go up, right? So I'm pretty sure we're going to be much higher by the end of the year. I just had Jordy Visser on my show. He's the president and the CIO at Weiss Multi-Strategy Assets, $4 billion hedge fund. Big Bitcoin guy. I mean, he kept talking about Web3 and crypto and things like that. They're a little confused, those guys, but I'll get him up the curve. But he totally believes in Bitcoin as a reserve asset. He thinks people should be buying Bitcoin, and he thinks that the price is going to double by the end of the year. And this is just analysis that he's been doing based off of where the equity markets are, and it is not decoupled, to your point, to the Nasdaq. It is correlated, and he actually thinks that we're up for the year on the S&P by the end of the year. Although interestingly, he was saying that he thinks that the Nasdaq will not perform so well, but he thinks Bitcoin will. So maybe he's saying it might decouple a little bit from that and just be coupled with just stocks in general, maybe. But I think it's because, the Nasdaq has been a little bit overvalued for the last few years. If you just look at some of these things, I mean, I don't want to point out companies' names or anything like that, but if you just look at some of these PE ratios, like 200x and 500x, it's like on their PE, it's like, what are we talking about? Like, I sold my company for 6 times earnings when I sold my business. That was not a great multiple, by the way, but still, I mean, if the company did not grow and did not shrink, it would only take 6 years to pay off that through the earnings, right? So what's the growth that they're expecting that they're paying like 500x on a company? Like, and people don't view this. Like Warren Buffett talks about this all the time. He's like, you're not buying a stock, you're buying the company. You're just buying a portion of the company. Think of it as if I bought the whole company right now, right? That's how you have to think about a stock. Like, would you buy the whole company for 200 times its earnings? Would you ever get your money back? What are you thinking about, right? So I don't think people are thinking. It's a store of value, right? They're like, well, I just believe it's going to go up. It's greater fool's theory. They're going to buy this stock and they think there's going to be another sucker down the line. It's going to buy it at a higher price. But at some point, the day of reckoning may come. Maybe we're there.
Yeah. I mean, I don't know how much I buy into this idea that the S&P 500 is going to have an up year. We're about to watch the most difficult maneuver ever by the Fed to increase rates, combat inflation, stop buying shitty bonds. And then at the same time, they're going to just inevitably either have to commit to letting our entire economy sort of default buckle and collapse for a period of time,
or they're just going to go back to printing more money, boosting up the stock market. Quantitative easing is never going to go away. I'm curious your thoughts on just this idea of where the dollar fits into all of these equations and where Bitcoin sort of also fits into that equation there, what your expectations are with Fed money printing, what your expectations are with rate hikes and inflation over the course of just this year.
Yeah, well, I guess the short of it is that they're probably, to get out of this, because to your point, we're probably going to have a problem, right? I mean, just statistically speaking, probabilistically, it doesn't look like it's going to we're going to be successful in a soft landing. Maybe they will be. The only time that we ever had inverted on the yield curve that there's been a soft landing, I think, was 1994. And there's a huge gap right now between basically where inflation is at and where the Fed funds rate is. It's like quarter point. Inflation's like 8% plus. It's the largest gap we've ever seen when there was an inversion. So like you could say that 94, they had a soft landing, but it just wasn't the same, right? It's different, right? Like the old saying, it's different this time. But this time it is different, and it's different basically for the same result, unfortunately, right? Which is probably a recession. Now, there's been banks that are coming out like Deutsche Bank and others that are saying that they think you're going to have a recession where we have a negative GDP in Q4 and then in Q1 of next year, and then we'll just come out of it. And why do you think we're going to come out of it? Because the Fed's going to have to step in. They're going to lower interest rates, and they're probably going to turn on the money printer again, right? There's going to be UBI or something happening. Something's going to happen. And that's obviously positive for Bitcoin, right? So on the other side of this, it's all great for Bitcoin.
Love that. Where or how do you think Bitcoin sort of fits into that equation? I know I'm asking speculative questions, and I know you're not a fortune teller, but just in your mind, where are your expectations? Maybe like 70% of it is going in this direction, or there's a chance it goes in another direction.
In terms of the price,
in terms
or what
of
do you ask?
Bitcoin adoption on US domestic soil.
Yeah, I think, okay. So one of the things that we saw recently over the last 6 months or so is I think the world's waking up to this, is the censorship resistant part, right? So I think that's going to be really strong for Bitcoin moving forward, where more and more, by the way, I have a bunch of friends that are hedge fund guys, and because they were some of my angel investors, and I just became friends with a bunch of their friends and stuff. And they're starting to see they're starting to really understand the value of Bitcoin as a result of like what we saw with the trucker convoy, and even with Russia saying we might want to accept Bitcoin, which, it's kind of noise, but the fact that they're even saying that, El Salvador, et cetera, right? And now you guys are telling me, what was it in Africa? I guess they just
Central African Republic.
Interesting. Yeah. So and I didn't even know that, like you said, when you came on. I think you're going to increasingly see that, right? Other countries are no different. Like, it's really interesting. Most of the world is really based off of the US dollar, right? Their currency is our currency, but they rely on us, our government, for their shortfall. Whereas the American people, we don't have anybody to rely on, right? We have to figure out how to diversify ourselves for the debasement, right? But if you're relying on the government, like or the US government rather, and you're another country, you would like to be able to get away from that, right? Because we're controlling you at that point, right? So the US dollar is a form of control, right? For our government with other governments. So I think increasingly you're probably going to see other countries waking up to this and saying they're going to embrace Bitcoin as a result of that. I think that's why Max, Kaiser is just so he's pushing so much on the El Salvador thing. I don't think it necessarily even is about El Salvador. It's a small little country, right? The GDP is like nothing. It's about a movement, and that's the first domino to fall. And so you want to embrace that. All Bitcoiners should embrace what they're doing so that other countries fall in line that are small. And when you have other small companies collectively doing this, it becomes bigger and bigger, and people start to wake up in the US and abroad that maybe they should also be adopting Bitcoin for those same reasons.
Is there, though, like a concern when we talk about, for example, Russia now saying that, we'll accept Bitcoin for our oil amidst all these sanctions? Like, my homeland of Iran has always been using Bitcoin now since about like 2016, just through VPNs to like avoid government oversight and people keeping an eye on them. North Korea potentially looking at Bitcoin in some capacity. Like, some of these people that in America, we don't necessarily think of those countries as our allies. Is one of those countries, or any adversary in general, adopting Bitcoin? Does that sort of paint Bitcoin domestically speaking as sort of the enemy almost.
Yeah, if you're Elizabeth Warren, right? So I mean, some of these politicians will try to use that in their toolkit, right? As to why they want it, but the truth is, they just want to control people, right? That's what that really is all about. So you know, the cash is probably the biggest use of dirty money in the world when you think about it. Actual physical cash, right? Whether it's the drug cartels or, I mean, who was the richest man that ever lived on this planet, other than you know,
Pablo Escobar.
Yeah, well, it really wasn't Pablo Escobar. I think it was Mansa Musa or whatever. Yeah, but brother, let's just say it's Pablo, right? Because that's who I was leading to, right? He was hiding his cash in like this in the walls and digging up holes in the ground. I mean, they just had so much cash, right? It wasn't Bitcoin, guys, right? This is the 80s. It was cash, and they're still doing this today with cash, right? So they're trying to create a CBDC again about control, right? And that's going to confuse a lot of people, unfortunately, in the short term, right? They're going to be like, what do I need Bitcoin for? We have a CBDC now. But if you look what they did in Canada and they froze everybody's assets and they came after people like Jeff Booth and others, like it's incredible what's happening up there. And this is supposedly a free democratic society, right? We are like one decision away from that happening here. And if you can't see that, you got to open your eyes a little wider. What's happening here? So yeah, it could be like a political thing. And that's why we have CJ and all those folks in DC trying to educate people on Bitcoin. And it's really important. And I think they'll continue to do that, and they'll make inroads there. They wrote the book, I forget the name of the book, but they wrote a book as well. And they're giving out, it was really just like an informational book to just give to the politicians to understand, learn about Bitcoin, understand the qualities and the characteristics and properties of Bitcoin that make it a strong, the strongest, hardest money ever, as Jason's book, right? You know, what is it called? Bitcoin, hard money you can't fuck with, right?
Yeah,
great book.
Hard money
great
you
book,
can't fuck with. And then CJ had the Bitcoin, the American Dream with Jimmy and countless others.
Yep. And both of those books are great, you know, and I didn't read CJ's book, but I've heard a lot of people that told me it's a great book. I did read Jason's book, fantastic book. I always tell people, by the way, if you want to learn about Bitcoin, go to VJ's, Vijay Boyapati's, his Medium article. It's probably the best way to start, because it walks you through, like, as he calls it, the bullish case for Bitcoin. It really walks you through. And by the way, the one thing I love about what he did, I think it was really intelligent, because he also tells you what the risks are to Bitcoin. Most Bitcoiners don't want to talk about the risks. There's a risk to everything in the world, right? It's just about managing risk, right? And so there are risks to anything. And the government is a risk. Like in terms of adoption, it's not going to kill it, but it is an issue in terms of like, do we want to get adopted in the next 5 or 10 or 20 years? Or do you want to wait 40 years because the government's making it so goddamn hard?
I got one comment that I keep forgetting to just say, and then a question. Jason, respond to my DMs. I want to invite you onto the show. And then my question to you, Jay, and we touched on it, like, you're absolutely right.
He's probably afraid you're going to rip him up on the Rare Pet base. Just tell him to leave him alone.
We're all friends. Eric Norris,
yeah, we'll talk to him about Pet base.
Hey, Alex is a Bitcoin NFT holder. He owns a Bitcoin war bond. But the question I want to present to you, and you touch on it a little bit, like my favorite thing to send around when anyone is curious about learning about Bitcoin is VJ's Medium article, The Bullish Case for Bitcoin.
Yeah, love it.
There are a lot of people who watch our show who are, I guess, exploring shit coins, or maybe are down the wrong path and still pay attention to us and what we say. Maybe just what advice, or what would you kind of say to them, anyone listening who straddles both Bitcoin and crypto, and why you think they should be focused entirely on Bitcoin?
Okay. So it's nuanced, right? Like if you're somebody that's been in Bitcoin for a while and you understand Bitcoin and you're doing that, then you're just gambling, and that's okay. In my opinion, that's okay. I'm not advocating it. I'm certainly not supporting it, but I'm saying I don't judge you, and I'm not the moral police. I'm not here to tell people what to do with their money. The one thing I can't stand about the Bitcoin maximalism is when you're telling other people how to act, talk, or what to say or do. Guys, we're libertarians, aren't we? What the fuck are we doing? Like that, I just don't believe in that crap. So if someone wants to go risk their own money and do that kind of stuff, sure. If you're a shit coiner and you're creating the coin, that's a different ballgame. If you're participating because you're trying to flip money to get more Bitcoin, which is what Jason does, right? In terms of like some of the NFT shit that he talks about, he's just a Bitcoin money maximalist, as he says, right? He's not necessarily not a Bitcoin maximalist, right? And like, what is a Bitcoin maximalist? You know, there's different versions and definitions for this crap, you know? My perspective on it though is if you're in that space and you're doing that stuff and you're promoting it and you're luring people in for a pump and dump, that's bad. I disagree with that, right? But if you're just kind of like messing around with it and you understand, because that's one person. For the people that are coming in new and they're like, well, I just don't know. I need 80% in Bitcoin and 20% Ethereum. They just don't know what the fuck they're talking about. Go read the paper again.
The paper being the white paper, the paper
Yeah,
being
no.
DJ's?
Well, the white paper for sure, right? But I'm saying go read BJ's thing. It's probably the easiest thing to consume. It's very easily digestible. I think it's the easiest place to start, and then you go down your path, right? And then, by the way, I recently had Alex on my show, and check your financial privilege, man. That's another one I think everybody, particularly the Northeast New York elites, right? Read that damn book, man. Yeah, great book, love it. Read that, right? You need to read that because what people don't realize, even in the United States, is like, I have a beautiful house, nice cars, all this shit, and then people give you looks at the red light or whatever. Neighbors make comments to other neighbors. It comes back to you, and it's like, bro, like, look at yourself. You have a house and a car. You may not have my house and my car, but there's people in the world, they ain't got shit. They're living in lean-tos still. Like, check your financial privilege, bro. We all have a different, we're all in pecking orders, right? So to speak, right? And into where we are financially and stuff. And so I think everybody needs to read that book as well.
I'll age the three of us, and I won't group you into us, but right now what we're dealing with inflation wise, that's never been the case in my lifetime. I've never bore witness to this or had to deal with these repercussions, but that's not the case everywhere else in the world. Again, my home country of Iran has 100% inflation in 2 years. In Turkey, incredible, over 50% inflation in just 1 year. This is catastrophic what we're witnessing around the world. But to your point, if you're up in New England or if you're in LA, wherever, if you're in a major metropolitan city, you're definitely not feeling things beyond just maybe your rent went up, maybe the cost for eggs went up $1, milk and whatnot. But you're absolutely right. We have benefited from this system.
I will say, when the Russian-Ukraine thing first hit off, right, was that the 24th February, I think. And about the 27th, a few days later, I put out a tweet. I said, I've been thinking about this. I'll probably give you a little more verbose version of this because it's not a tweet. It's not 140 characters. But my thought was, this is a little bit, he's playing for something different than I think everybody else is thinking he's playing for. He's playing for resources, right? I think he's thinking long-term, the long game on Russia. And we need to be independent of the global economy, right? And so he had some leverage with oil and gas. And he has leverage with a nuclear power, right? At least we all think he does, right? I don't know how updated they may be or may not be, but I ain't messing with that. I don't know about you. I tell you what, I know we're not messing with that as a country, right? Otherwise, we'd be in there, boots on the ground. We're not, right? So there's kind of a code of conduct as to when you need to attack versus, respond, all this kind of stuff. As you guys all know, they're not a UN nation. All right. So where am I going with this? Comes down to, again, the financial privilege, right? The narrative is that we're putting on sanctions because we're trying to save the people in the Ukraine. And listen, man, I think it's a noble cause, and I totally agree with that. From a moral perspective, you can't disagree. But the question is, there's always ripple effects, right? What are the ripple effects that are happening? If you're seeing in Peru, they're protesting over food and the prices of everything going through the roof. So I don't know. There might be a couple million people that die there, but what we do might end up impacting 10 to 20 to 50 million people globally, right? And so you're starting to see these ripple effects. So this is the check your financial privilege stuff, right? And it's also who are we to be the ones that are the arbiters of the world, And it's because, again, the fact that we're able to even do that is because we don't have Bitcoin, right? So that's the control of our monetary system in the US dollar,
No, you're absolutely right, man. Jay, I want to give you the opportunity to maybe ask us or touch on a subject that you wanted to touch on that we haven't really been able to explore. I don't know. We've covered a lot today, and I'm gonna just leave it at that and stop talking for a second.
Why didn't you guys get Elon at the conference?
So I'm not in charge of programming.
That's P, right? What's up, P?
We tried and several times, and we got denied. We got to the last level of who approves this, and they said no. So maybe
now
next
he went
year.
on Clubhouse and he was telling us the whole process. It was very difficult, and it's an interesting process based on what he was explaining to everybody. Pretty cool though. I haven't been to the conference. I think I'm going to go to the conference next year. Hopefully it's on the East Coast somewhere.
You people didn't come?
I didn't. No, I didn't go to any of the. I've never been to a Bitcoin conference. I used to go to conferences for the tech shit, TechCrunch conferences, Disrupt, all this shit years ago. I got there's nothing for me to promote. So most people are there. They're in a business or something like that. But I probably should just go for deal flow and stuff as an investor.
I was gonna say you should. We could sidebar about this, but definitely for what you do, doing a whale pass, there's a lot of stuff this year in particular that we had that catered towards whales who wanted to look at Bitcoin investing, and then founders who are looking for investors to build out their companies.
Cool. Yeah. Next year. I mean, you guys are already about to do, are you doing ticket sales now? I think I said
Tickets are on sale
Yeah.
now. We might as well
Pre-sale
with no
through the end of the
location, which
week.
is crazy. Yeah.
Yep. Pre-sale through the end of the week, but I think your first one's going to be a great one, man. Can't wait to have you there next year.
You have any idea, like directionally in any way? Like what are the top venue? Because people saying there's only like 5 or 6 places in the country.
Yeah, there's only a couple places. Yeah.
It's like San Diego's, Miami. Yeah.
Yeah.
Well, I don't think it could be in California because California sucks.
Yeah, California sucks.
I mean,
LA
Vegas would
local.
be sweet. Vegas would be a cool upgrade, but
would you ever
Vegas,
consider New York? Would you guys ever consider New York City?
I don't think New York or Vegas. I think in the United States it's like Texas and Miami.
Okay.
But I can't. We don't know yet.
We're honestly making stuff up right now. All we can say with certainty, and like certainty is only 1/3 of us believes this, that it'll be in the US. I definitely could see, like, honestly, I could see Vegas in the cards until people realize like what having all those Bitcoiners in Las Vegas of all places actually would ensue and entail. And then people would rethink that and we would probably shift it. But I'm on board with putting it in Vegas.
I think you guys should do it. If you do it in whether it's Vegas or whether it's Vegas or Miami or even Texas, right? For that matter, they're very, very hot climates. I would definitely choose a little bit earlier. Some of the people that live down in Florida were saying you probably should have done a couple months earlier just because of I don't know how hot it was when you were there. But it can get pretty hot and muggy and stuff.
We hit it perfect this year weather-wise.
You got lucky with the weather? Yeah.
Oh yeah.
I remember 21.
By the way, you got to do it there because I was invited to Sailor's Place barbecue. Eric Weiss asked me to go, and I didn't go because I was like, "Shit, man! I hope they have it here next year. I want to go."
Honestly, you're not wrong with Sailor down there. It might be, who knows though? Maybe Elon's going to be our keynote next year.
He's like, we don't want leaders, right? But he's kind of like a captain.
He's
got the ship behind him. He's got the ship behind him all the time. He's like the captain of the ship.
Look, man, 100%. I've been doing a lot of research on Sailor, and let me tell you, I genuinely went into it wanting to be like, let me find a reason to not like this man. Like, let me find like what he's happening. I'm only left more and more impressed. I can't wait for the mobile wave to come, and like I'm gonna dive into that book when it does, even though it's over a decade old. Just like to see the way that man like thought about the future that came to pass and really came to life.
You know what's interesting, Q? It's like when I talked to Eric about it, his orange pilling of him and stuff, it was like he was telling him about it for years. But the interesting thing was it didn't click, I think, until he saw the inflation, what he thought would be the inflation coming, which he was absolutely right about. What a call, by the way. He caught that real early. And that's when it kind of clicked. He was like, well, should I buy gold? What should we do? Because we can't sit in cash, right? So what are we going to do? Do you buy S&P? Do you buy, it's like, well, that's volatile. You don't know. And it's like, they're printing more of that all the time too. So it's interesting how he's come to, it all takes us a while. We don't all get there right away. Right. And that's why I tell everybody, it's like, you're not going to get there on your first introduction to Bitcoin. It takes several touches. I mean, I got introduced to Bitcoin in like 12 or 13 initially. Sure. I've heard about it. Like I never read it, but I started to read about it. It was Fred Wilson, if you know who that is, the venture capitalist in New York. He was writing about it a lot on his blog, and I started to like research it after reading about what he had to say. But I viewed it, I just viewed it like very Ponzi-like back then, and it just wasn't a legitimate asset. There wasn't enough value in it for me to understand that. And I think that probably Saylor thought the same thing, and most people. And even today, by the way, for the institutional argument that everybody was talking about for last year, on the institution money coming in, there's a variety of reasons why that's not happening, right? But I think one of them is it's like, even though it's $1 trillion asset, it's just not that big. If somebody's got to put, like if like Apple, what do they have, like $200 billion in cash in the balance sheet? They'd have to put a sizable amount of Bitcoin in, and that would really move the price of Bitcoin. So it's like they have to buy that over an extended period of time, possibly. And then now that they're in, remember Elon said the reason why we sold it was to test the liquidity, right? No, I believe that, but that's what they said, right? There's some truth to that though, because you got to really understand if we had to get out of this for whatever reason, right? What would happen? How could we impact it? What is our size within this in terms of the float going to do to it? And these are things I think that like, as we get to like $3, $4, $5 trillion, you're going to see more and more. And then it's like this kind of like the super cycle at some point where it just starts to really take off.
Is there a point though, where like I always bring up this cautionary tale, like a billionaire's 1% allocation into Bitcoin is more than me, Alex, and Chris could do combined. Like maybe most of the plebs at Bitcoin Magazine could even like afford. And so like, if you all of a sudden have like 10 billionaires doing that, that's almost 1/10 of the entire Bitcoin value based on today's value, maybe a little bit more than 10%. Like, is there sort of this line where we have to be careful of, having too many of these billionaires having a concentrated power to then not allow for like the
No, because this
currency
goes back
much
to what I was trying to say earlier, which is as that starts to happen, right, the number starts to go up, and as it starts to go up, you're going to see a distribution of the OGs that have been in for a while to say, you know what, I've made like 1,000x on this or whatever they made, and the future growth is only like 50x. And what's the growth over what period of time is it 50x? And you got to take that into a calculator and say, if it's going to take another 20 years to get the remaining 50x on this, what's the growth rate? Is it like 25% compounded? Okay, I see other assets that might be able to do that. You know, there could be other assets that they could be invested in, and they'll divest some of their holdings into that, and that will distribute out to more people, and that will lower the volatility, I think, over time. There's a lot of things that could also help with the volatility. I think that in US, we have this wash trading that's happening, wash trade for, you know, so, and I'm not saying the NFT wash trading, right? You know what I'm talking about, the tax code, right? Yeah. Okay. Where you can, like, it drops, you sell, buy back.
Yeah.
Right? Just
and
the
stocks,
audience
you
understands.
can't sell a stock and then buy.
You got to wait 30
days.
days. That's right. 30 days. And you have to be out of it completely before you come back into it. Right. That's not the case in Bitcoin. Right. And I think if they could eliminate
that rule for 2023 though, or no?
They have not. No, Sailor and I were on a Spaces, and I asked him that question about that, and he's been talking about it too. And he's like, absolutely. He thinks it's not going to be like a panacea. It doesn't fix it completely, but it's all these like knocking things down. Another one, John Ficori, if you guys know John. Right. So John, he's a Bitcoiner as well. And he just did Satincentives. I think he was on, he might've been on here somewhere. But yeah. So he says it's like the tax code issues too, like how it's accounted for on the balance sheet for public companies. I'm not an accountant, so I can't speak about that intelligently. But John's given a great explanation as to why that's also impacting the decision-making for public companies to want to put it in a balance sheet. And I think we all know, if you listen to, Kathy Wood was saying it's like 5% or 10%. I think it's 5% of the cash on the balance sheets in the S&P moves in. We go to $400,000 or $500,000 per Bitcoin, right? So how do we encourage them to do that? These are things like regulation, you know, different laws. And a lot of Bitcoiners like, we don't care about regulation. Well, it matters, right? These things do matter, right? So if they could fix some of those things, you could start to see the number going up a little bit faster because more flow is coming in. And then, as I said, it will encourage those that have been in for a while to see what the expected future returns are, maybe divest into something else.
I love that double explanation, because I think the second time is really when it clicked in my head of like, oh my God, you're absolutely right. Like the 1,000x gains on Bitcoin are only going to be at a certain point for certain people, depending on what your entry price was. But at a certain point too, like you will be able to look at other opportunities with Bitcoin only have a potential 10x and then something else having a potential to 20x. What those other things are remains to be seen. We didn't really talk a lot about the idea or concepts of Satoshis. I wonder, Jay, just Sats, just in general, because that's
in exchanges.
Just like more day to day, like no one's really sending, unless you're a whale transacting on much higher levels of transactions. You're not sending a whole Bitcoin at a time. You're sending pieces at a time. Talk to us about just sort of what that adoption looks like, or what you think that adoption looks like. Because I think personally, I think they're a little separate from just mass Bitcoin adoption to then understanding what a SAT is, how to interact and use a SAT on a regular basis.
Yeah, it's definitely one of the biggest issues I think out there. Brad Mills talks about this all the time. He's always constantly like sending notes to people in DMs to the different exchange heads, you know, whether it's a Kraken or Unchained or whatever. They don't have an incentive. I hate to say it, but I don't think they have much of an incentive to want to change it to SATs on their websites, because it's almost like they're encouraging the shitcoinery, right? Because they make money on this shit. Let's be honest, it's incentives, right? So if you're selling more than Bitcoin, unlike Corey, right? But everybody else is selling something else. It's about volume and transactions, right? And that's how they're making money. I think long-term though, all of them, including Corey, they have to figure out another model, whether it's DeFi or something else within Bitcoin. And because if you think about it, at some point, like the Robinhood they laid the groundwork of 0% commission fees, right, on trades. And that's coming, right? I mean, it's just a matter of time when Fidelity and Schwab and all of them allow you to just buy and sell Bitcoin within your brokerage account, and they're not going to charge you anything for it, right? So I think that's going to happen. This 1% fee or whatever it is, for the average exchange, I think that's going away over time, right? So there's going to be custodial service fees. There's going to be like lending products. There's going to be all kinds of other things, I think. But to your point, to get people to buy it, you can't price it in Bitcoin because it's like these fractions, right? Like I have a contractor that works for me, and I was like, I pay him like $200 to edit my videos or some shit. He lives in Nigeria, which is cool. And I pay him like 0.007 or something like that, right? So it's like super small amounts, in terms of like converted to fiat. like, why not just do it in sats, right? I think that would look at least feel better, right? People are feeling they're getting like a number, not a fraction of a number. And it's like, how do you wrap your head around that for most people? So it really is the exchanges that need to do that. And it's unfortunately, they don't have much of an incentive to do that, I think.
No, that makes sense. Look, Coinbase makes so much more money trading everything else outside of Bitcoin, and they'll look to it and say like this validates everything else. When in reality, you look at Bitcoin at large versus everything else, and then no, it's still the biggest, baddest fish in the sea.
Yeah, most people don't understand, like, that are coming into this. They have no idea that one Bitcoin is 100 million Satoshis. They don't know that stuff, right? Like they're just like, oh man, I missed it. I can't afford a Bitcoin. And that's like the first thing people say, right? And then the next thing is, oh, I'm too late. Even they can afford it. It's like, where's it going from here? And it's like, bro, you don't understand. There's only going to be 21 million full Bitcoins. They don't understand any of this stuff. That's why you got to encourage them to read VJ's paper. They'll get it.
Everyone, if you're watching this, if you're listening and you have not read the bullish case for Bitcoin, you need to go just stop what you're doing, pull over the car, park it for 45 minutes and sit there and just read it. It'll take you 45 minutes, but it will be the best.
And by the way, we should congratulate VJ. His wife just had a baby. I don't know if you saw that. Yeah.
Congratulations, baby number 4. Happy to hear that it's healthy. And hopefully we have yet another Bitcoiner joining the ecosystem.
I don't think that's a hope with him as a father.
I have one more question before I let you go back to, actually making money and stop wasting your time talking to us. Bring up Fidelity a little bit. And yesterday, Michael Saylor announced that MicroStrategy is going to offer through Fidelity the ability for people, their employees, to buy Bitcoin with their 401k. This is the first bank doing it. Initial thoughts or reactions on that, and then what does this look like game theory wise for the rest of the banks?
Yeah, so I think that was great. I've been talking with them for some other business that I'm working on with some people as a potential custodian for something. So they have Fidelity digital assets. I imagine it's going through that in some way, and how they're connecting that with, because Fidelity is a very large organization. They have different divisions within it, as you probably know, right? So it's like, I think they're like $7 trillion in assets under administration there. It's incredible. So yeah, I think that's great. You're probably going to see more doing that. I've already seen some people kind of pushing back. There's like, oh, it's like, it's a highly risk asset. And it's like, no, it's not, like you're just seeing the volatility day to day. Right. But if you look at it zooming out, we all know there's really no risk to this. And when you really understand the fundamentals of Bitcoin, but I think it's great. And I think you're going to see more things like that, whether it's IRA accounts that are easily, you buy Bitcoin directly. Right now, you have to do a self-directed IRA, and you have to go find a company that can support that kind of stuff versus just going into your brokerage accounts and be able to have that option and just click it. They started with the 401k, but I guarantee the next step will be like Roth IRAs and traditional IRAs. And then more importantly, over time, it'll just be like, you could just buy it in your account, taxable accounts, right? So these are just like the first step of what we were just talking about a minute ago. And you're going to see more and more of this happening, I think, over the next year or so.
Do you think, though, that a company like MicroStrategy, because they're on the forefront of Bitcoin adoption and have Bitcoin on their reserves, is more inclined to do something like this versus just Fidelity rolling this out for all of their 401k customers?
Well, they did roll it out for everybody, actually. So the question is, who wants to adopt it, right? So if you're an employer that's using Fidelity as your 401k, you can. They're not defaulting it that you can. And that part I didn't understand. It should just be a default. Everybody gets it. But maybe they have to allow the employer, who are the plan administrators for their plans for their employees, to accept it and turn that functionality on. So as I understood it, and I could be wrong, but I'm pretty sure when I read that it is available. It's just a matter of them, I guess, getting educated and then saying, sure, I'll allow my employees to do it. Now, some employers, to your point, may be like, oh, I don't want to do that because I'm not that they're legally responsible, but they'll feel a responsibility or accountability that somebody put into their 401k, like whatever their annual contribution is, $10,000 or $15,000. And then by the end of the year, it's down by 50% because there's volatility in this thing. And maybe those particular employers might be worried, again, because they don't understand Bitcoin, right? So Fidelity probably needs to not only just send an email to say, hey, you could just do Bitcoin, but also an email, maybe with VJ's paper, but something that kind of explains what Bitcoin is so that they can get an understanding. But to your point, I think if you're using, like, a lot of companies, a tremendous amount of companies are using Fidelity for their 401k plans, including a lot of technology companies. And I think most founders of technology companies probably understand this stuff. So I think it's going to get adopted within the technology sector first. But if you're running like an oil and gas or a railroad company, yeah, I could probably see them maybe not turning that on for their employees.
I'm not going to ask you about Exxon, but now that idea came into my mind, I'm just going to say I'm definitely going to bother you to come back onto the show, Jay. For our audience who maybe doesn't know where to keep up with you, I know you have a newsletter. I know you're on Twitter. I know you have a podcast. Where can they find more about you?
Yeah, just look me up on Twitter. It's JAYGOULD, and any of the social platforms. It's the same username, including AngelList and LinkedIn and all that kind of stuff.
Awesome, Jay. Thank you so much for joining us today. It's been an absolute blast and pleasure chatting with you, man. I will let you go back to all the wheeling and dealing that I'm sure has been blowing up your phone, man. We're gonna have a quick commercial break, guys, and then we're gonna go through news and notes with me, Alex, and Chris before we have our Bitcoin Magazine Pro segment with Sam Rule. So stick around, guys. We are back. What is up, guys? Thank you for sticking around. And we have news and notes. We touched on it a little bit this morning with Jay. I think we'd be remiss to not just start with the news out of Africa. The Central African Republic announcing that they have now adopted Bitcoin as legal tender. Let's go just around the circle. Alex, we'll start with you. What are your initial thoughts there?
I'm excited, man. I'm pumped. I think this plays into, there's like another constraint to the global Bitcoin adoption game theory that people often play out, right? Like laggards will be penalized in terms of price appreciation, which if you just watched us with Jay, we kind of touched on. It's not so much that you're not going to get these like moon boy, everyone's going to benefit from like a Bitcoin kegger and holding and being in for the long term, but you just can't benefit as much as the people who are in years or halvings before you. So I think in terms of nation states, like what we're going to see is not only earlier nations looking to adopt to not be left out in terms of price appreciation, but obviously everyone still gets the benefits of permissionlessness. So the second thing I would add to that game theory is like people who adopt Bitcoin first generally need it or are looking for a solution to some kind of problem. Like they're looking to stop bleeding wealth in US dollar terms. It's well established as a store of value, growing as a medium of exchange. Some people even have it as their personal unit of account. But I think it's going to be these small countries that no one paid any attention to before, like El Salvador. We're all experts in El Salvador now, but before Bitcoin, none of us had ever really paid it much attention or been there really. So I think it's very fitting. Central African Republic, I don't know anyone that's been even anywhere close to that, but they have a need for it. They have, I think, Q, you have more information on kind of a civil war going down there. I would assume, I don't know this off the bat, but that they don't have control of their own mint and that they're kind of beholden, if not to France, but some other like larger centralized country issuing their own currency. So they see an immediate solution in terms of Bitcoin. And potentially, I mean, they're going to make mistakes. They're going to go the route of shit coining as well, probably drop their own CBDC. Like we're going to see the whole gamut. But broad strokes, this is very, very good.
Chris,
gradually
your thoughts?
then suddenly. I'll just leave it at that. Keep it short and sweet. Gradually then suddenly. And I think to Alex's point, I mean, we're going to see the other smaller nations are more incentivized to adopt it because of the issues that they have internally or using another larger centralized country's currency. And ultimately it's failing them and they're looking for a solution. So it's going to be interesting to see where the El Salvadors, where the Central Africa, like where these countries are going to be in 20 years. You know, are they going to end up selling? Are they going to lose coins? Are they going to be global leaders? You know, no one would have ever thought these countries might be global leaders if it becomes a global reserve currency, but it's definitely very interesting from a geopolitical standpoint.
Yeah, and I think it's very apparent. The only thing you need is internet connection. Like people probably kind of like roll their eyes at Bitcoin or think like, you know, I'm not tech savvy. I don't want to get into all this. I don't want to learn how to do all this. But if you have a bit of urgency and just an internet connection, you're good. You can participate in the network. That's all you need. And I don't know the percentages offhand, but it's very popular to have a cell phone in Africa. There's a lot you can do with Bitcoin just with a simple cell phone and even a tenuous internet connection. You only need it to broadcast transactions now and then. If you're not selling Bitcoin, like you're good.
Yeah. And even to that point, I think Jeff Booth said this recently in a podcast. He's like, all technology goes to zero. And that doesn't even just mean in terms of cost. It means in terms of ease of use. And zero, I mean like easier to use. Like right now we're using Zoom. I've never coded a line of Zoom. I've never seen a code of Zoom. We use Slack. I don't know how that was programmed or coded. I just log on and it works. I double click on the icon and it works. So I think it's getting there with Bitcoin. I'd say Bitcoin's not there yet, but it's definitely getting there with QR codes, with ease of copying an address and sending it to someone else to paste in. It's getting there and it'll take time, but it's rapidly increasing like any technology.
So I do want to, and I'm going to preface this by saying, like, my research was done literally this morning. I'm reading off of Wikipedia. Like, I'm in no ways an expert on civil war, let alone the civil war that is going on in the Central African Republic. But I think it is worth also highlighting and noting because this is a country that is currently dealing with a civil war. They have been dealing with it, I believe, since roughly I just had it up. Since 2012, this country has been in a civil war. Their most recent elections are questioned by most of the population right now, where you had over 800 of their polling locations closed down. There's, again, grain of salt. This is just on a quick research this morning. There are ties with the current political leadership with Russia and how Russia has helped sort of instigate and prop up this leadership. What does this actually mean for Bitcoin and this adoption? I think it's worth highlighting and just being aware of because, there are claims about who or what Bukele is or does for his country, but there are also supporters of Bukele. In a civil war, this is not a situation where, it's an election, we're done, like we're good. Look at this country in America right now. There's still people who are upset over the results of our civil war over 100 years ago who contest those fucking results or don't believe or buy into this idea that the US or the Confederacy should be delegitimized, if you will. So what happens if the current regime that has enacted this Bitcoin legislation loses power? That is sort of this other side of the coin that we do have to, I think, be paying attention to. Yes, it's a great step forward for Bitcoin as a whole. I think this further validates the argument and discussion that countries that have not been a part of the money printer, keep in mind, the Central African Republic was a French colony until about the 60s. And that's when they gained their independence. But they've been working off of some sort of a French-backed currency in their own nation. And now they get to separate from that through the use of Bitcoin. This is a huge step forward for a country that has essentially been hamstrung financially by their colonizers from generations before. It does concern me that the country's stability is in question when we talk about, why was compass mining going to regions of the world to set up these miners that are unstable, whether it's over in Ukraine or Russia and that falling out of that. Well, now you're looking at having Bitcoin be considered legal tender in a country that's just in a civil war? What are the repercussions or outcomes of that? I think it's worthy for everyone to be cognizant and aware that this could not end well for Bitcoin adoption in that nation in the short or medium term.
So you think there's a potential for it to come and go, and I kind of agree with you. I would say like I'm hesitant to declare this kind of like official. I've seen one piece of paper in French that says this is legal currency, and a small change in Wikipedia, which also reflected a change in their legal currency status. This is an adoption on paper. I want to see it in practice. I want to see Bitcoin being put on balance sheets. I want to see citizens using Bitcoin and economies of Bitcoin springing up. So we're going to have eyes on this story for, weeks and months to come.
Yeah, I would agree with exactly Alex said. I don't really have anything else to add to that. I'll send it back to Q.
Do we want to go on this New York stuff that we've been hounding on, but the legislation has moved from, I believe, the state house to the state Senate to push forward the mining ban, specifically to say that Bitcoin miners can and only use clean energy, in quotes, to mine Bitcoin in the city of New York. So this legislation is really gaining some teeth right now. Chris, I'll start with you.
Yeah, I think it's all of the state, the whole state. I didn't think it was
the whole state.
I believe it's the whole state of New York. Yeah.
Look, New York has repeatedly chosen to leave themselves out of the Bitcoin economy. I mean, that's fine. If they want to have hard regulations and not allow people to access the cheapest Bitcoin on the that you can get from a major exchange, which would be like Strike or a platform, if they want to make it hard for Bitcoin business to spring up in New York, I mean, fuck them. If they want to make it hard to mine Bitcoin, fuck them. Put your miner somewhere else. Plug your hash rate in at home. What are they going to do about it? You know what I mean?
Yeah, exactly to that point. And like what Q is saying, one of the women's, her name is Anna Kelly's or whatever, Kelles. I don't know how to pronounce it, but anyway, CJ and her were going back and forth. CJ Wilson, I know we've had him on the show before. And he was like trying to say like, this isn't right. You guys shouldn't do this, blah, blah, blah. She ended up blocking him. I'm sure he said more, threw some memes at her. But then he even goes, and she's actually part of the Young World Economic Forum group. So it's just so funny that she's,
they all are.
Yeah, no, that's the thing. Like, just connecting the dots here. Obviously the World Economic Forum had a hit piece or a hit video yesterday saying, Bitcoin needs to change its code, kind of along the Chris Larson argument, one of the Ripple guys saying that it needs to change the code. It's harming the environment. I made a tweet out of joke saying, if the World Economic Forum didn't meet in Davos once a year with their private jets, we could run Bitcoin for 6.15 years uninhibited. But it was obviously just in joking. There's no numbers to back that. It's just part of the meme. But yeah, I mean, Alex, if you want to add anything to that.
Well, I was just going to say, didn't the Bitcoin Mining Council get together and determine that 50+% of the hash rate is renewable and green? Am I wildly overestimating there? Or
that was something that I did see circulated on Twitter.
Right. The incentive structure is not going to change. Bitcoin miners are always going to seek cheap energy, and they also have this brilliant incentive whereby Bitcoin can harness power that energy that nothing else can, and send it back to society just with a simple internet connection. That's all you need. You plug your miner into some far off source of hydropower and you're good. So I think it's going to increasingly go that way. I don't know what all the rush is. Obviously, I don't know. You guys might be a little more politically involved. Like, why do they want to ban this so bad? Excuse me.
Because I'll say, just from what I saw before Q goes, by 2023 they have ESG requirements to be basically an all renewable state, mainly centered out of New York City. And then I'll have one quick anecdote as well. So obviously, to Alex's old point, saying, well, why would they not allow Strike? Strike didn't want to apply for a bit license. Not that they didn't want to apply; it was just restrictive in what it was going to do. And so Jack Mallers took a hard stance about, I'm not doing that, and he even said on stage, like, F the bit license. literally calling out New York in 2021's conference. But to that point, one of my buddies uses an exchange that won't be named. I'll tell you guys after this ends. But he was using an exchange that has a bit license out of New York, and he was using them. And a couple weeks ago, they reached out to his wife. So his wife is an authorized user of his account, but he's the primary holder. She's an authorized user. It's very funny too, because he's like, even though we're married, she still has a different last name. So anyway, they emailed his wife and they said, hey, like we've noticed, he's using it. Like, where's he sending this Bitcoin to? And I think he was just sending it to different wallet addresses and stuff. And she literally was like, they're married. She loves him. She's like, what the hell is this? So she literally responded like, it's none of your business. They're like, well, in threat of like, if you guys don't tell us where he's sending his Bitcoin. And the crazy thing, it wasn't on the exchange. He had self-custodied it, and then he was sending it to other wallets he had or doing various things. And they were saying,
it was KYC already.
Yeah, he was already KYC, but they listed like all these addresses of where he had it had gone from the exchange to a wallet and then to other wallets. And, they were asking, what are these new wallets or what are these new addresses? And he's like, it's none of your damn business. And they're like, well, as us being a fiduciary, we have to keep tabs. And like, no, you don't. Close my account then. And he had like no Bitcoin left on it. He always withdraws from it. But they were like further QA-seeing him.
Yeah, this noose is only going to tighten, guys. I mean, the blockchain's transparent, and they're KYCing as many people as possible. So get your Bitcoin off exchanges and start learning some best practices. But you gotta realize we're always gonna have peer-to-peer. I mean, the value of Bitcoin, they might squash it with regulation, but they can't stop it. So I don't lose sleep at night over these laws, man. If the state wants to exclude themselves from all the great innovation happening around Bitcoin and Bitcoin renewables, let them go right ahead.
So I've been trying to see if I had some sort of a tinfoil hat, but bear with me on this theory. What is the number one based on what's the number one industry in New York?
The finance industry.
Okay.
Coffee and bagels.
I would also call it, I'm just speculating. If it's something different, correct us, but I believe it's also the finance industry. What is Bitcoin going to be most disruptive to?
The finance industry.
And so do we really not think like maybe some of these bankers in New York and some of these big hedge funders in Wall Street who have donated millions upon millions of dollars to these lawmakers, maybe got in their ears and said, hey, I don't want Bitcoin to prosper in this state. So like make it kind of more difficult. Is that not a possible scenario that you guys think is playing out?
There's potential for that. Sure. I also think, Bitcoin mining as a whole, the state's got to find an in, and I don't believe that New York is going to be operating off renewables by whatever date you said, Chris, because
2023 or 2030.
Yeah, show me anywhere that's doing show me anywhere that's doing that effectively right now. You know what I mean? So I don't know. I think it's good for like Bitcoin, and like the next iteration of mining is really going to become like more at-home mining, spreading out the hash rate, small pockets of miners. We know a lot of people who are taking up mining in themselves, and maybe we watch a hash rate drop off and then just regrow organically, and those people are going to use renewables and find cheap sources of power. I don't know what the state's going to do. I have a hunch they're going to burn coal to mine Bitcoin. But
yeah, and to that point too, like we see centralization it's always constantly decentralizing, centralizing, like these exchanges are trying to get bigger and bigger. The Coinbases, the Krakens, the Geminis, all of them, they're trying to get bigger. But when they get bigger, then you become a target for the state and the government. It's the same thing with mining pools. I believe that, the incentives are aligned for them to do the right thing, but the government can come knocking and saying, hey, like you got to turn off this pool unless you're using 100% renewable. I think it's not in their best interest, and they're going to have lawyers to fight those things, the riots, the marathons, the HODLs, all those. But, if you're mining your own Bitcoin at home, exactly what Alex says, if you have two S9s or two S19s, and I'm not telling you financial advice, what to invest in, what to buy, what to mine, But like, if you do it at home, it's a way that you can mitigate in the event that all these miners get compromised and then the hash rate drops off. You're more profitable in the mining that you do yourself. So I don't know. That's just me.
I dig it. I dig it. Alex, do you have anything more for this story before I try to have us all dunk on the WEF?
Oh yeah, I was literally just gonna say fuck the WEF. And yeah, the World Economic Forum is circulating crazy narratives that just don't make any sense. You can't, if you're like a new person to Bitcoin, first of all, don't use Coinbase, find a better exchange. Don't end up getting yourself KYC'd and whitelisted, and just have them track your whole business. Like find a good way to set up and like grow your kind of Bitcoin exchange usage and peer-to-peer network so that you can function when they come cracking down. But secondly, we're not moving from proof of stake. That's not happening. They can't coax us into doing that with these weird videos. Bitcoin is nothing without proof of stake.
Or without proof of work.
Without proof of work. I'm sorry. Did I say that whole thing backwards? I'm so sorry.
Shitcoiner.
I said we're nothing without proof of stake. No, we're not. I'm sorry. Without proof of work. Proof of stake even in cryptocurrencies is essentially no different than the system we're already in. So if you enjoy that, continue with your fiat and shitcoin mining. But the rest of us, we prefer proof of work.
Yeah, I got two things to add real quick. I mean, the reason that the WEF made this promotional video saying to change the proof of stake is because they can control it then. Even in proof of work, even if the WEF right now were to buy a bunch of Bitcoin, I mean, more power to them. Bitcoin's for enemies. If they wanted to buy a bunch of it, but just because they have a lot of Bitcoin doesn't mean they can control the network, doesn't mean they can command the network, doesn't mean that they can coerce the network. And that's the whole point of Bitcoin. Alex Barba got a great point of like looking into privacy best practices. There's a thing called Bitcoiner Guides. It's run by Bitcoin Q&A. I'll put his Twitter in all the chats and whatever. He is a NIM, which means he's anonymous online. I've interviewed him for my podcast before. He's an awesome dude. He's very privacy focused. He works for Foundation Devices to help for marketing, and he helps run calls there. But he wrote an amazing guide about non-KYC Bitcoin, about using it privately through coin joins, setting up Lightning channels, hiding your Lightning nodes. It's very complex, and I don't want to overwhelm you, but definitely take a look at it. He's very helpful if you DM him. He's like always looking to help people that are trying to be more privacy focused. So he's a great dude, and I really recommend that.
So I think, Alex, it's worth us highlighting this comment. Do you have an ETH tattoo somewhere on your body?
An ETH tattoo? No, I don't have any ETH tattoos. I don't even have a Bitcoin tattoo yet. I'm sad about it.
Oh, you were talking so much hype on getting one of those. Did you not get it?
I know, dude. I didn't anticipate how little free time I would have in Miami. It was like zero. So none. I couldn't get a tattoo. I went there and watched people get tattoos for a second, but
I do want to, before we move on from this WEF stuff, like I'm spacing on which one of you two said it, but you put it perfectly when you said like, it's about control. Chris, I think it was you. I'm going to just give you credit for it. And this idea that like, hey, now Vitalik becomes a stooge for the WEF. We're not too far away from Vitalik literally having his own page on the WEF as being some sort of a like bona fide member, because he's going to just do what they ask him to do. And this is what we talk about a lot when it comes to what actually is decentralized Bitcoin and what is not every other bullshit cryptocurrency out there. You have that centralized person, you have the business, you have someone, the WEF, the Fed, that a president of a country can go up, call up, bring over, sit them down in front of them and dictate to them, hey, you need to do this because it's for the best interest of society based on my beliefs, based on what I'm saying. And that's what we're trying to get away from. And by allowing ETH to do this, like we're reincorporating the old system on new technology. This is just where shit goes to die. I'm going to make my bold claim right now. Like I've been very vocal about the fact that like I don't think ETH goes away just based on how much stuff is built on top of it and how much investment has gone into multiple layers above what the ETH layer is. But a move like this to align yourself with old business practices and the old guard for technology that's literally meant and designed to tear that down and recreate it, you just put a ticking time bomb on yourself, Vitalik. Simple as that. I hope you're still holding the Bitcoin that you bought up when you founded Bitcoin Magazine, and thank you for doing that. It's the one good thing you founded. All right, that's my mini dunk.
I mean, he's only, to the best of my knowledge, he's only ever sold Ethereum. He's never sold Bitcoin. So I guess, Vitalik partly is he's a long-term hodler.
Yeah, to our knowledge, though.
To our knowledge. I mean, I don't know his addresses and stuff. They claim that this is his address, and apparently it hasn't moved, or at least the one that people check a lot hasn't. But I don't know. I haven't checked in a long time.
I think there's one more thing. I'm trying to just pull it up. Oh, this Bitcoin and gold hybrid ETP has officially launched in Switzerland. And this is essentially, I'm not going to call it an ETF per se, but it's an investment vehicle that will allow investors to get exposure to Bitcoin and gold at the same time. But regardless of your thoughts on like gold versus Bitcoin, I think this is a very interesting step in the right direction towards sound money in general, away from fiat currencies. Like Peter Schiff is probably sitting there spinning up a way to like validate his gold stack that literally hasn't moved, nor his old frail body would be able to actually pick up and carry anywhere. But at the same time, like for all of us crazy maxis, like this also validates us to a degree as well. And it pairs these two things that essentially says, and in my opinion, sends a signal to the rest of the world saying, hey, this paper money that like whatever government decided to print as much as they wanted, that's actually not what we care about. And that's not what's valuable. Shit like gold, shit like Bitcoin, these are valuable assets. And in turn, we're starting to introduce, I think, what could be the future basket currency types that different countries are going to back their fiat currencies off of. But I'm just speculating. I'm just making shit up to a degree. What are your guys' thoughts?
I have a
think
great.
the
Go ahead,
what do you got?
Go ahead.
I was just gonna say, yeah, like this exchange. I have no personal interest in this exchange traded like product, but I think just like symbolically, maybe it's useful for some institutions, but I don't. There's Bitcoin subsumes all of the features of gold. Like all of the benefits of gold are not only they're totally eclipsed by Bitcoin. So I don't see a purpose for it. It could just be a Bitcoin ETF, but in Switzerland, they're very familiar with hard money, and a lot of people have their assets, not only in like their local currency, but in other harder, longer term, lower time preference sort of solutions. So I think they're very familiar with gold, and if we are going to see that trade from gold into Bitcoin, if we're going to see that outflow, I don't know, maybe this will just help put that on the radar somehow. But yeah, I would say if you have access, if you're not an institution with like limited investment possibilities, you should definitely just buy the real deal, buy the real Bitcoin every time and self-custody it. But if you're an institution, some exposure, as we always say, is better than none. So
yeah. Funny little fact. So what was it? Yesterday or Monday was the 11-year disappearance of Satoshi, of his last sign-off message. Was it yesterday or Monday? I forget.
I think yesterday.
I think it was yesterday. If you bought gold 11 years ago yesterday, it was at the exact same price and it remained completely flat, meaning that I think it was $1,826. 11 years later, on the 11-year disappearance of Satoshi Nakamoto, is still $1,826. Obviously, there's volatility in between, but it's just funny.
That's a store of value, isn't it? So when we say Bitcoin is a better store of value, we mean it pays some dividends. You got some extra appreciation there.
Yep. If you,
supercharged price appreciation.
Exactly. And I didn't know the exact percentages, but obviously Bitcoin went from like a few dollars, or even, I don't know what it was 11 years ago, but it was
Bitcoin's up like 1 trillion% from the first listed trade ever
that we can find. Things like that.
It's crazy. It's it's like the most appreciating asset in like recorded human history. Like I can't find one that's up more than Bitcoin is.
Yeah. It's truly a free and open market. This is actually another tidbit. When I was at the meetup last night, someone was saying, I'll actually ask this to you guys. How long did it take for the first difficulty adjustment to occur in Bitcoin?
How long did it take for the first Bitcoin?
Would have had to be when a new miner came online.
Yeah.
And then
So,
10
well,
minutes after
there's
that.
actually, there's a couple, like the power, I'll say this, there was a few that were running for a while, and then it finally like had to adjust up because it like went from just a few to a couple more.
Okay.
I would say several weeks, if not months.
It took almost a year in order to do
Okay.
it. It started obviously January 3rd is when it started mining. January 8th, the first block was found. December of that year, it finally went up. And those 7 computers that were running it, obviously one of them being Satoshi's, one of them was Hal Finley's, I'm assuming Len Sassman. And there's a couple people that you would assume, you know, on the cypherpunk list that were running it. But imagine, and we were even making this joke that Satoshi's, you know, 2009 stupid like computer or laptop, whatever, is like the most profitable ASIC, like Bitcoin miner in the history. And it's like exponentially cheaper and like, you know, mined 1 million coins and no big deal. It's just like, you can't like, oh, you think an S19 for $8,500 is worth it? Like his computer was probably $200, $300, and it's like the most profitable miner of all time.
While we're on that beat, it's worth reiterating that Satoshi paid fair price for his coins and had to actually pay an electricity bill to mine them. That's the difference between him and every other ICO that's out there.
Yeah, he mined at a loss.
Especially Hex.
Yeah, he mined at a loss for the better part of like a year or two, at least, before it fully got listed as a price. So he was expending energy for losing money on this quote unquote token that was Bitcoin. So I completely agree with that. Like he was, paying his electric bill, and you never thought about that, but crazy.
I think the one other piece of news, we like touched on it briefly yesterday, but I don't think we really like dived into what game theory this can have, just domestically speaking. The city of Fort Worth turned on 3 ASIC miners. And, you know, this is almost the exact opposite of what New York is doing. We were just talking with Jay about how, like, look, places like Florida, places like Texas, they're becoming hubs for Bitcoin in general, like pushing forward legislation. You're seeing businesses move to those locations to help expand. Like, what merits do you give turning on, I think it was 3 ASICs that they officially turned on, or 2? Like, obviously they're not going to change the hash rate drastically with just 3 miners. Would love to see them actually win a block reward. I'm not familiar enough, maybe one of you two are, on whether or not they're being a part of a pool as a result, or they're just going to be independent miners. But would love your guys' just general thoughts on what this could mean for other US cities, either starting to mine themselves or continuing to bolster and give pro-Bitcoin legislation for Bitcoin businesses to move there.
I'll let Alex take that first.
I don't know. Initial thoughts. I'm in kind of like I hate the state mood today, so I would say I don't. I'm happy if they stay out of mining for as long as possible, because I don't want to see them co-opt it and kind of ruin the business and mess up the incentives. But overall, like, truly, I think it's good. I think it's a great thing. It's a great way for them to educate themselves and their citizens and warm people up to this idea of just running a couple ASICs at home.
Yeah. No, I agree. I think it should be, left up to the people to mine, at home mining. I know Upstream Data, they're really big into, building units for people to mine in, or even just selling. The black boxes are really cool. It was actually one of the cooler booths at the conference. Everything was really cool at the conference, but, they were running 2 S19s that were whirling really loud. You open the box and you can hear it, and then you close it, and it was like pretty quiet. You would have never known that they were mining in that machine. It was really, really cool. Did you guys have a chance to go around much? I know you and Q are kind of tied to the desk for a while.
Yeah, I've got FOMO, man. I didn't get to see a lot of the mining stuff, or I guess chose not to, or never found it. I don't know, but next year.
I saw the desk. I saw the bathroom. I saw the whale lounge so that I could get lunch, and then the store. Specifically, a lot of Sound Money Fest I spent working the store. Also, actually a really funny story. I want to make sure I give him a shout out. I think it's Shane Trammell. No, it's not. Shane Hazel came up to me while I was genuinely working at the store the day after the GA day 2. So on Sound Money Fest, when we're not doing the desk, and we're just like talking about like, you know, this show, the desk, whatnot. And I'm also like checking out this like random lady who like wants to buy some stuff from the store. And she turns to me and goes like, how much is, I don't even know what it was. I was like, oh, let me check for you. Rips me apart and is like, you've been working here for 3 days and you don't know how much the price on the stuff is?
Oh, really?
And then Shane goes, do you know who this is? This is cute. And I was like, oh man, I feel like a douchebag right now, but also like, why? Why am I being attacked for not knowing the price of anything at the store? Speaking of the store, my bad. I know that there's no FOMO discount for tickets. That's on me. Sorry. FOMO discount is for the store, and you could buy this shirt. You can buy Chris's windbreaker. You cannot buy Alex's dope AF crew neck, but you
can't
can
buy this. You got to steal it.
No.
You can buy one of these.
There you go.
Yeah.
Use promo code FOMO, get 10% off. And then, of course, as we had mentioned earlier today, tickets for 23 are on sale. Pre-sale is going to end on Friday. So you have 2 more days left to lock in these super cheap tickets. These are the cheapest tickets you're going to have for Bitcoin 23. Plain and simple. If you had FOMO missing out, like come join, buy the tickets now. Look, most of you guys travel to Miami to begin with. Like, no, there's no way 25,000 people live in Miami and just all decided to go to the Bitcoin conference. No, most of you guys flew in. So guess what you're going to do? You're going to fly wherever it is next year anyways. Lock in the cheap prices now. Do it. Don't regret it. Don't wait. Don't complain to us when the tickets are over $1,000 a pop. And you're like, why are they so expensive? Well, because you snoozed and you lost.
Yeah, if you have money that for some weird reason you can't put into Bitcoin, flipping tickets is a great secondary market. Just saying.
Yeah.
Buy 100 tickets to be a wealthy person this time next year. All right. So what else do we got? 10% off everything in the store, including a Bitcoin Magazine prescription with promo code FOMO. We will have discounts on tickets. They're not coming yet. It'll be a while. The presale will end. So get them this week.
The only other piece of news I see, I guess the state of Vermont is introducing 23 Bitcoin ATMs, but like no one other than Dylan LeClaire lives in that state. So good for him. Sorry if you live in Vermont. There's this. This is that crypto Bahama thing.
Crypto Bahamas.
That's happening this weekend. I can't say certain things because I'm afraid YouTube will get us in trouble. But that guest list is interesting. I mean, our dear friend of the show, Anthony Scaramucci, will be in attendance, but also I think some very anti-Bitcoiners will be there. And I'm curious to see what, if any, news transpires out of this conference. I'm just going to leave it at that. I don't know if either of you guys want to comment on that or just let me keep sounding like a jackass.
I thought it already happened, to be honest. But I thought it was last weekend.
Just shows how important it is that we have no idea when it's occurring.
Yeah, I've got zero interest in these cryptocurrency conferences. It's just Bitcoin only, man. It singleness of purpose gets you far in life. No need to diversify. Just focus on what you're good at.
What's the Michael Saylor analogy? You know, the only people that held Amazon stock to today without selling any of it. I mean, he sold a little bit now is Bezos and his parents. And they're infinitely wealthy versus trading it and taking tax hits and stuff. And I think Saylor has a pretty good idea in that. And he was not promoting Amazon, but obviously he was saying there's risks to owning Amazon by comparison to owning Bitcoin that are not there. You don't have to worry about a corporation. You don't have to worry about governance. You don't have to worry about a bunch of other things by comparison.
Yeah, my PSA on that note would be don't get activity bias here in this, we'll call it a sideways market, even though I think we're 2 years out from the halving, and I think we're in the bear market. I will be curious to see where the price goes, but don't get activity bias and start doing dumb shit just because the price isn't appreciating to where you want it. Remember your principles. Remember why you're in this, and just hold your Bitcoin.
I would agree with that.
So what you're saying is we shouldn't have signed the bonus checks.
We shouldn't have signed the bonus.
On the Bitcoin ATM front as well, Senator Andrea Kempis, I really hope I pronounced that correctly. Apologies if I did not. Helped introduce the first Bitcoin ATM inside of the Senate floor in Mexico. I think a lot of eyes are on Mexico and specifically Senator Kempis and what she's going to be able to do as far as pushing Bitcoin forward in her country. She gave a very interesting and passionate discussion at the Bitcoin conference where you can check out her comments and her speech with Samson Mao as well on our YouTube channel. Curious your guys' thoughts on, now all of a sudden these senators are seeing Bitcoin every single day instead of just having Senator Kempis, hounding them about it a little bit. It's in your face when you walk in. What effect do you guys think that's going to have?
I think it's great. I mean, I have a visceral reaction of excitement when I see a Bitcoin ATM in my local kind of like neighborhood, or like one pops up at a bodega or something. I don't use them. I don't know what the use case is really. But I think the business is good in terms of brand awareness. Like, yeah, I think it's cool.
They're good for non-KYC sats. Some of them, so it depends on your state. New York is one of the worst ones that you need to scan an ID and have a cell phone. Most Bitcoin ATMs, I will caveat that with most, or at least the ones that I've seen, they just require a phone number that you can use a burner number. So you can just like generate a fake number, plug it in, and then you scan a wallet and it sends it right to that wallet. So you put in cash.
I'm going to push back on that because you're going in person to buy Bitcoin in a heavily surveilled, probably like a gas station environment or something. Most of them I've seen. It's like the most KYC you could get.
You wear a mask. COVID, dude.
Literally, that's my pro tip. You don't want my cameras? Guess what? You're afraid of COVID for the next 10 minutes.
Sunglasses and, Ray Charles sunglasses and masks to, protect up. So,
but like, look, if someone really wanted to put in the effort, like, you drive in, they're going to find what car you drove in. Oh, you want to take Uber or Lyft? Well, guess what? Uber or Lyft now has your information separately. They can figure it out, back channel to figure out. So to Alex's point, like, yes, a lot of these places are heavily surveilled. And if the government wants to find out who you are, they genuinely could. It's just a matter of, how much effort you want to put into hiding and how much effort they want to put into finding you.
Yeah, suffice it to say, there's a pretty big trade-off depending on where you get your Bitcoin. So it's good to have a variety of exchanges, a couple different options on the table. And I don't think going in person to buy them from an ATM is even in the top 10 of your alternatives if you have an internet connection. But if you don't have internet at home, go use an ATM, I guess.
All right, we got CK here. I think we're waiting on Sam Rule, but we're going to get started with the deep dive shortly. So I think
Bitcoin Magazine Pro.
Oh, Bitcoin Magazine Pro. I am sorry. That is force of habit. Bitcoin Magazine
Dead
Pro.
Naming.
Yeah.
All right, we're going to go to a quick commercial break, and then maybe you'll never see Chris again after that.
Sounds good. We'll be back in a sec, guys. We're back now live on YouTube, guys. We're just getting set up real quick here, waiting to get Sam in.
I want to apologize to people who want to potentially come up and ask questions. That is not available, unfortunately.
We're still on commercial.
Nope, we're back right now. So
we are live.
Picking up my audio.
What's CK? Sorry.
I hear a bunch of feedback on like the.
Yep, working on that.
Okay. So are we live?
We are live. Just give us a second. Gang on YouTube watching.
Sam, can you join as a speaker?
Yeah. How's that?
All right, everyone. Welcome back to a markets conversation with Sam Rule, senior analyst over at Bitcoin Magazine Pro, formerly known as The Deep Dive. This is being simul-streamed between Bitcoin Magazine Live on YouTube, Rumble, and everywhere else where you can get video, as well as on Twitter Spaces here on Bitcoin Magazine Twitter. We will also be posting the recording as a podcast over at Bitcoin Spaces Live and on YouTube. So a lot of places to get this conversation. It's going to be wide ranging. We're going to be talking about the stuff that Sam and Dylan LeClaire have been writing about in Bitcoin Magazine Live. Sam, really excited to have you here. We're also joined by McShane, Q, Chris Alemo, our producer. And I guess let's kind of jump into what is Bitcoin Magazine Pro? What is the product that you're working on, Sam? Why don't you tell everyone about it?
Yeah, totally. Can you hear me okay?
Yes, sir.
All right, cool. Yeah, what's up, everyone? I'm Sam. As CK mentioned, I work with Bitcoin Magazine. I also work with UTXO Management, which is a Bitcoin fund. Pretty much an analyst on both those companies. The main thing that I focus on led with Dylan LeClaire, who's out enjoying Europe today, as you can see by his Twitter. We put out a research and analysis product on everything Bitcoin market dynamics. So we go over macroeconomic conditions, Bitcoin mining, derivatives, on-chain analytics, anything that's interesting about the Bitcoin market that can be told through data, charts, information. And we try to piece those things together, figure out what's going on, give that to readers in an interesting format on both kind of free and premium subscriptions. So if you're ever interested, you can check out the Substack link in my bio. Free subs, we send about an issue once a week, and premium, we try to put something together every weekday when we have something good enough to cover the market. So a wide range is kind of what we shoot for, and really just try to understand. We're learning and educating ourselves as much as we do with other people. So yeah, I'd say that's what Bitcoin Magazine Pro is about.
Awesome. Yeah, and I guess Sam, maybe your audio is coming in a little choppy, so maybe you can QA that a little bit. Q, I guess, do you want to jump in? I know I've been reading the last few newsletters, the one that you dropped on Monday about the bigger overview on the Bitcoin market. I know there's a lot to dive into there. I know you've been dropping a lot of content, Sam, on your Twitter this week. So I guess, Q, why don't you kind of get us kicked off with the first question?
Yeah, Sam, why don't you paint us a little bit of a picture of the Bitcoin mining landscape and Bitcoin in general? You guys wrote an excellent piece at the end of last year, kind of highlighting what the Bitcoin miners in the public markets were able to return versus Bitcoin miners, and then what you have now seen from the start of this year to now.
Yeah, totally. Is the audio sound any better there? Clean? All right, cool. Yeah, so typically what we talked about a lot of these previous spaces is going over kind of some of the macro cases, especially over the last few months with Bitcoin, talking about VIX, equity correlations, bond markets, things like that, kind of how Bitcoin fits in that bigger macroeconomic picture, because it's been really important. But, another piece that we like to cover that's just as interesting, maybe not as interesting on the price at times, is like the state of Bitcoin mining. So really wanted to last week, free for anyone who wants to go check that out. It's really a holistic view of what's happening in the Bitcoin mining space across like kind of public Bitcoin miner data, especially that's some of kind of the best data that we can get on where Bitcoin mining is today and kind of where it's going in the future and where it's gone through. So that issue is highlighting a lot of that. And, kind of the key piece and some of the first couple of charts there, looking at like the year-to-date performance and like performance from all-time highs for these public equities across, public mining stocks like Marathon and Core Scientific and Riot, and just looking at like really the performance related to these miners versus Bitcoin. And hilarious enough, like if you looked at this chart, Bitcoin versus miners or Bitcoin versus equity stocks, you'd probably get something similar with maybe a lot more downside in Bitcoin miners. Bitfarm's CMO had a great quote, essentially like when Bitcoin goes up, miners should go up more, and when Bitcoin goes down, miners should go down more. So kind of looking at like the kind of the sophistication strategies around that performance, why Bitcoin miners are interested, and we can get into some of the details too, based on questions, or I can just keep kind of rolling through what we put out. But I think it's an important question, an interesting one for like people who are getting into Bitcoin, looking for Bitcoin exposure across all different vehicles, spot ETFs, futures, Bitcoin miners itself. I mean, self-custody options are probably the best bet and the thing to do for most people. But then you have like some of these other sophistication strategies and attractive opportunities for investors. So kind of wanted to dig into some of those performance and kind of analysis there in that piece. And then, go over some of the data they were reporting and also what that looks like for hash rate and hash price and some different metrics in money.
Yeah, I mean,
I think one of the really interesting things about this latest report that you guys put out and just a lot of the conversations that we've been having on this show, the idea that like right now, there's no way to have direct access to Bitcoin investing or exposure to Bitcoin through a 401k or any sort of retirement account, with the exception of now you have some public miners, you have certain ETFs, spot ETFs, you have MicroStrategy and whatnot, but it's a very limited pool versus the entire pool of just the broader stock market, the broader investment vehicles that are available to people. I think one of the things that you guys highlight very well in this piece is just the idea that while these risks on assets are, I think I said that right, that they're still able to sort of have higher betas and higher volatility as a result. You had better returns last year, but you're also seeing now a little bit of a drawdown this year. I'd love for you to touch on a little bit of just what you're paying attention to, whether it's supply chain issues, whether it's just overall growth and hash rate of the ecosystem at large. What are the factors really playing into the growth of Bitcoin miners from last year and into this year now, or the decline into this year now?
Yeah, totally. So you make a good point in terms of like differentiating the two. These are different investments for different risk appetites. There's a lot more sophistication if you're thinking about getting into a Bitcoin miner. Just, basically you have Bitcoin, you're looking at the upside of the adoption curve and where it's growing and kind of the network effect that's going to play out. And then if you're looking at it like investing in Bitcoin miners, it's everything from CapEx and OpEx and the general cost of mining, which is lower for them, but also expansion plans and kind of market cap valuation. So it's a lot more tricky there. But basically since like November, you have this whole turnover in risk on assets, Bitcoin included miners, those charts, you can see that, some of these miners are down 60, 70, 80%. And in Bitcoin terms, just starting to go down like really over the last 6 months as well. And some of these had kind of like a great return in Bitcoin terms if you're looking at it over like the last year and a half from like the mining industry standpoint. So if you look at like someone like Marathon and Riot, they're returning like 70% and 200% in Bitcoin terms over the last 2 years. And, a large part of that, like overall in the mining space, it's been a bit of a golden period in Bitcoin mining and in a gold rush right now. And all of these miners are looking to try to expand their operations as much as possible. And kind of a big reason for that, through 2020 and into 2020, you had some kind of events play out when mining was really large in China. You had flooding, like kind of mass flooding effects that took hash rate offline. You had kind of Bitmain supply chain issues with ASICs that were coming out. And what a lot of this does is, it takes hash rate off the network. But for miners who have hash rate on, they're going to be making more revenue per hash that they're putting out. So it's a more profitable time. It's more revenue coming in, and it also came at a time where we kind of have like a retail bull market playing off too. So it took this metric, which we can cover in one of these charts, hash price. It took this into like what is a usually deflating metric over time as mining becomes more competitive. And it was hugely profitable for valuations, for earnings, for anything like related to growth for miners. And I think, they're taking that opportunity, especially post China ban, to kind of ramp up their output and like scale up as much as they can. And so, one of those issues today is that a lot of machines were bought and a lot of machines are still being bought or getting deployed and scheduled. But now it's kind of post this China mining ban when hash rate went down to like 84 exahash. You need a place for all those machines. So there's power capacity issues, there's infrastructure capacity issues. Guys at Luxor just put out some great details on this, and essentially, it constrains the market. And you want to get all this hash online, and we can talk about some hash rate projections for what this year might look like. But that's kind of the state of everything today, is like those miners are scaling up as much as they can compared to last year. It's kind of an arms race to get hash rate online. They make up about, something like 10 to 13% of hash rate, depending on how many public miners you're accounting for. And they're expected to take up like over 30% of hash rate by the end of the year, based on their projection plans. So that's kind of a little overview. Happy to, we can dive into some more of those specifics.
I think before we do that, for maybe some people who aren't as familiar with what exactly is hash price, can you explain where that number comes from?
Yeah, totally. So it's really just a metric for miners to track how much revenue they're getting in terms of like their machines and output that they're putting on the network. So that is like market value, which is a total revenue that miners can make over like per unit of hash and power, hash just being kind of the computational output that these ASICs are putting out to solve kind of these block rewards and transaction fees kind of computation. So it's measured as dollars per terahash per second per day. And so the more hashing power that comes online and revenue kind of stays constant, the less revenue like hash price or like revenue per miner per unit of hash is going to be for the network. And so like reverse, if miners all of a sudden getting more revenue as Bitcoin price rips up, the hash rate holds the same on the network, they're getting more revenue per unit of hash. So it's really kind of this calculation measure. There's, you can also calculate like cost per hash as well, kind of terahash. And so then you can get this idea of like how profitable it is to mine at a certain time. So it's a really good indicator of like how generally what the network is in terms of how much revenue they're making, all costs held like equal. Hash price going up, it's more profitable time; going down, less so.
That makes a lot of sense. And I think that the explanation of hash price is really, really important. This is going to be a pivotal metric for us to continue to monitor as hash rate and this ecosystem continue to develop. I just want to give a shout out. There's like close to 200 people over in Spaces. If you want to see these charts, we're sharing charts. We're going over this research in detail on video with Sam over in YouTube. So if you go to the first pin or the second pinned tweet, you can go straight to there. So check that out. It's a great resource. But yeah, I mean, Sam, just kind of sticking on the miner just ecosystem. A huge dynamic has been miners hoarding Bitcoin, miners not selling, miners being able to finance using the public markets. Just kind of going through what I'm seeing in the ecosystem, things are getting tighter, prices not moving as quickly, and expectations are changing. But with that being said, I don't think that many of these organizations are looking to sell Bitcoin as their first option. I feel like that's almost like their last option. So I guess, can you talk about these dynamics in terms of, will these public miners hold Bitcoin or continue holding Bitcoin the way they are? And if that changes, like what do we have to kind of like think about these dynamics here?
Yeah, totally. The way I think about it is like overall, these public miners now have a huge access to financial markets across debt and equity, have been leveraging that. You can see some of those deals and getting revolving lines of credit with someone like Marathon at Silvergate. There's been a couple other miners to do some similar deals. They're taking on a relatively higher interest rate, but getting a revolving line of credit where they can deposit USD or the Bitcoin they're holding. So that helps Bitcoin as collateral if they want to keep that on their balance sheet. And there's thresholds they need to operate for the valuation of that collateral as well. But essentially, miners are, I think, comfortably getting to the scaling point where they are trying to take on as much Bitcoin on their balance sheet as they can, and pretty much committed to the markets across most consistently in their investor relations and monthly production updates that they're committed to doing this. And so, just tracking some of that information, and I think is a useful way to say, okay, are they reverting on some of the things they're talking about and holding Bitcoin on balance sheets? Is that changing? That could signal time potentially that they need more cash flow. It's kind of a treasury that they can access when they need to. They don't have to stack, but they've kind of committed to their investors that they're doing so. Just over last month, those holdings were up 7% month over month, and they've been increasing pretty much over the last year. So you have a little bit of this macro shift where, whether it's the scale, whether it's access to financing, debt, equity that they have available, whether it's that they expect to be growing their market share and they kind of have the viability to be able to do this, it seems like a trend that's here to stay. So just in terms of data, that's monthly data you can get, and you can see that kind of reverse course. If we're going to get into maybe more of a capitulation event that we're in right now. But I think at the other side of that too, the hash price is still in a pretty appealing spot. I mean, it's around 17 cents, and it's come up from a very long trending low of 7 cents. So Bitcoin mining is still in a very strong revenue profit driving period as well. And so I don't think we're too much of a risk of seeing some of these miners revert. But if you're going to, it's definitely going to be seeing in the Bitcoin holdings data that they're coming out with. Even interesting, I think Hive related, they had a note last time in their piece that they do some Ethereum mining too, but essentially they're selling their Ethereum for Bitcoin as well. So when you have miners that are doing both, in some cases, you can see those dynamics when they're trading one asset for the other. So it still seems relatively pretty strong. I think it's more of a macro trend that's here to stay over the next 3 or 4 years. That doesn't mean you might have some capitulation out of some miners or potential mergers and acquisitions if one miner has, maybe bad operational executional risk on that front too. But it's been pretty promising. We've seen on the on-chain analytics side, there's some measurements to see miners sending Bitcoin to exchanges, and essentially that is just a down into the right trend over the last year or 2 years when you're looking at kind of a 90-day cumulative. So you're seeing a lot less activity and kind of sell pressure from larger miners overall that are ultimately going to be having closer to 30% of the network by the end of the year if their expansion plans play out.
Before we dive into actually the expansion plan and how it looks like pacing wise, I do want to ask you, and maybe this is more of I may be assigning you a new project to work on, and if so, I'm sorry. Is there a price level for either the Bitcoin price itself or for just the general hash price to hit that might trigger some of these miners to have to capitulate and have to sell something in their reserves to keep growing at the rates that they're promising?
No, totally. There's a great metric for this that was created by David Puel in the Puel multiple, which is really tries to gauge selling pressure potential on the market. And so I don't have the exact kind of numbers in front of me of what that might look like, but essentially what that looks like is the daily kind of miner revenue or issuance that they're getting over the last 365 days, kind of an average. So it tells you, hey, based on the last 365 days, here's what miners are making in terms of revenue, here's what they're expecting for plans. And when we get a price crash, in terms of what level is that below in terms of kind of a rougher standard deviation. So there is a multiple on a ratio there that has kind of articulated pretty well in the network at large. Essentially, I think you're going to have hash price probably trend towards 10 cents through the rest of the year. That could affect maybe smaller, more unprofitable miners to have some capitulation, turn machines off, look for lower energy sources. I don't necessarily think that's a lot of pressure on larger miners in terms of like that cost profile. I don't know if I have an exact number in mind. I imagine once you start getting down into like below 30 into like 20,000 type levels, and then you're seeing this hash rate expansion at the same time, which makes it harder to drive revenue for current hash network for miners. That could probably potentially see some issues because, you know, right now you've got an interesting dynamic where you have hash exploding and expanding, and it's, you know, up 20, I think 27% on the year today. I think previously in this report right at 22, which is maybe a little bit lower growth than what people are expecting for the year. But then you have price down of 18%. So you're seeing this pretty big divergence. So not a number in mind, but probably a good project or scenario to map out what those look like.
Can you touch a little bit on, like, there were some very lofty expectations set by public miners to reach a total of over 300 hash rate. I believe, if I'm remembering that number correctly or those figures correctly, we're about a third of the way through the year now. How is it looking as far as hash rate expansion going? Are they pacing, keeping up with pace? And what are your expectations given some supply chain woes and everything that's been going on for the rest of this year?
Yeah, totally. It's a interesting way to think about it. I mean, at the end of the last year, you had a really good Galaxy Digital report out that put out, you know, 300 exahash kind of number for the year. Some other kind of mining reports, people thought of something similar. And so that's kind of been like this ballpark number to think in the head of maybe it's an expectation, maybe it's just kind of a target to see will hash price hit that, especially kind of after this kind of China post mining ban. But what's interesting is, like, in terms of all the larger public miners, you're all going to find that like they're expanding like crazy. And there's a good chart in here just to show of those reported figures. And this is not all the public miners, kind of their current hash rate of what they're expecting today and where they're going tomorrow. So by the end of 2022, and even some of these estimates are kind of like early 2023, depending on if there's not any delays here. So, but what you see is here is that you've got like a basically 37 exahash online from this group, and there's probably a good, you know, 4 or 5 sizable ones that are not in here, depending on kind of they're not having 2022 estimates like completely clear out there. And they're expecting to go over 90, you know, exahash, and so it's 154% growth from this group. Now that said, like deployments have been a little bit slower than like anticipated from these miners. So a lot of that is, you know, kind of what we were talking about before, is you have all these machines, you have them ordered. It was kind of a fire sale, like when these mining rigs went to like super low prices post China mining ban, and then you're able to get them on discounts and lower prices, and you have this kind of collapse in price as well. But the hard part is, you know, power generation, infrastructure capacity, kind of labor shortage as well to get all of these things plugged in. And so that's really the issue now, and kind of the trickier part. And some, it's curbed some delays. So like Marathon recently came out and said, hey, we've got kind of a 45 delay on this megawatt plant that we're trying to get up, kind of the connection grid set up. And so it's curbed it a little bit. But I mean, if you look at, another way to look at it is to just look at like where the hash rate growth is today. So after 4 months or close to, we're somewhere in between 22 to 27% over these 4 months. And you start to annualize that out, and you get a pretty decent sized growth rate if this is going to continue into the expansion plans that we talk about. And then you're looking somewhere about like a 280 to 300 exahash by kind of the end of the year. And what's, you know, interesting about that too is just like hash rate has been on this trend where, like, you look at it over the last, you know, 4 years or so, you have like an 80% growth rate of, you know, 4 years ago, then another 80% growth rate, a little bit less than that. And then you have the network that still grew 22% even post China mining ban, and all of that happened. And now you're getting a little bit even more of a rebound, you're kind of back to trend. So you have like these 80% growth rates happening in really hard fall to 22%, and now kind of coming back to that. So it's not as a sophisticated way to say, hey, here's all the rigs and here's all the assumptions of when these are going to come online. So certainly delays. I would still say that something like 280 exahash is still in play for the year, based on a lot of these, like you look at Core Scientific or Northern Data, who are not only doing their own self-mining hash rate, but they're doing like managed services as well, and having the data center and the rack space as a business. And they're incredibly, like Core Scientific, is talking about taking 13 point exahash today to over 42 at the end of the year. So I think you take it with a grain of salt that all of these larger miners want to bring that hash on, they want to scale it out, all these plans, but there are some delays in some of these that will affect it for sure.
Can you touch on maybe like 2 or 3 of those delays, whether just based on what you're seeing out there in the market?
Yeah, no, I mean, I would just say like a high level view is just like getting the machines plugged in terms of like infrastructure, right? So like you need the rack space, you need the energy generation sites, you need the megawatts capacity, and all of those are just essentially getting built out by all of these miners today, a lot of different locations, especially around North America. So most of those delays are just how long it's going to take for those sites to come online, and then you're going to be able to plug in those machines pretty much.
Sam, I'm kind of curious. A lot of people have been making more money on public miners than Bitcoin. Obviously, we've been talking about how we are reverting back to these stocks underperforming Bitcoin. How do you think that retail investors should try to like navigate stocks, Bitcoin? Obviously nothing can replace HODLing your own coins, but given like, potentially a bear market, that's something we haven't really talked about quite yet, but, given changing tides, where do you think there's like the least market risk in terms of allocating capital beyond just holding Bitcoin?
Yeah, I can kind of paint what like my thoughts in terms of if you were someone who wanted to hold Bitcoin and you want exposure potentially to miners as well. So if you think about it in terms of like Bitcoin terms, like Bitcoin's your unit of accounts, I think one thing that's pretty interesting from these miners right now is that they're all hitting these near lows in Bitcoin terms. They look similar to kind of USD charts, but all below average over the last year, all incredibly tanking. And so you're looking for these opportunities. And I think, Preston Fish makes a really good point about this. It's like, at what point, if you're ever going to sell your Bitcoin, and this is probably more way into the future, it's the time when like Bitcoin's your unit of account, you want to take some of that and you think there's upside to grow that beyond like Bitcoin's growth rate today. And so that's when like some of these miners look terrible in Bitcoin terms. And that's like really key. And so right now they're going through that, obviously 70-80% down for some of them. There's different risk profiles in that. You look at some of these, it's incredible outperformance in more bullish markets and hash price times. In bearish, you probably want to see more of a capitulation potentially play out, or like a further low in equities before saying allocation to that. But ultimately, if like you're getting these things on the cheap in Bitcoin terms, then that can be a good time to take some of what you think. If you're interested in that, it's more of an investor allocator, like capital decision. If you want to go through like the valuations and check that out. So I don't know if that is a decent answer to your question, but it's more, I don't necessarily recommend saying like, hey, take some of your self-custody stack and do this, because I think you need to be cautious of like when your valuation metrics, when you're looking at these, and we're going to be publishing more of these on miners in the future. But ultimately, you're giving up this self-custody option. It's typically kind of a more sophisticated option for miners that are more attractive to like higher institutional capital, or when you have like regulatory risk or retirement accounts when you can't access these things. But at the end of the day, a lot of miners are, it's 0.8, 0.9 correlation for the most of the time, depending on the miner to Bitcoin. So it's pretty close. I would say I'd be more cautious to take on minor allocations unless like you see like incredibly cheap valuations in a bear market. Typically, you're going to get more upside in a bull market for miners, especially like during periods of higher hash price.
I'm curious, and like
I'm more just curious if you maybe know this from the time you've spent looking at stuff like the historical hash rate. But has the halving had any effect overall as we sit 2 years away from the next halving, or is it just more focused on the as wallet sizes or the number of wallets grow, as the number of total Bitcoin users grow, so too does hash rate?
Yeah, totally. I mean, the halving definitely has relative effect on, like, in terms of the block rewards that you're going to be getting, right? So like if all else equal, right, price stays the same, you're getting lower block rewards per that. You know, ultimately it's competing for a scarcer supply of like Bitcoin for those subsidy rewards in those issuance. And so more hash rate coming online to just compete for that kind of lower amount. But I think hash rate is just also in this like natural arms race and expanding for kind of price all the time. It's still incredibly profitable to be a miner if you have the scale. I mean, maybe less so. It's becoming tougher as home miners and getting more innovative and efficiencies and thinking about where you can get like lower energy sources of power and cost. So I think it does have an effect because everything that, you know, the rewards are all becoming scarcer. It's getting way more competitive over time, and it's so lucrative. So as long as, you know, you have a low kind of marginal cost of production, and that's driving lower, and you're getting more efficient ASICs as well, then there's still a good, you know, profit and revenue to be made overall in mining.
Sam, I want to transition into talking about bull bear markets. I have insider information saying like, hey, excitement at exchanges is not the same as it used to be. I think a lot of people feel the angst on social media, and you know, the Bitcoin super cycle, the end of 4-year cycles, these kind of like narratives that were playing out in late 2021. It seems like they've quieted down a lot. I want to hear your take.
Yeah, totally, for sure. So I think to talk on that, probably it's good to talk through like thinking that, you know, I was going through in the fall. Basically, you're having price shooting up to new highs. You're looking at, okay, everyone's speculating on what level of kind of like institutional demand is coming in. Like the supply side from what we look and study from like on-chain metrics and kind of just everything else in general in terms of data we're looking at was so incredibly bullish relative to other periods that we've had before. But obviously supply side is like totally one side of the equation. And kind of, you know, really into November, you have this total shift of the market where I think you had a little bit of a runway before you had this broader macro market regime that was playing out regardless of what Bitcoin's market was about. I mean, Bitcoin is so small still and compared to the rest of the assets. So when you get like this broader macro market regime shift, it's tough to sustain what was happening. And it doesn't help that also, you know, kind of the China kind of mining ban there kind of deflated some of what could have been kind of higher price cycles as well through what we had. So all that said, I think, you know, you start seeing this lack of demand, you start to see this like more macro regime changing kind of in November, you know, through December, we started really focusing on a lot of that macro market regime shift and what it means for Bitcoin. So I think that's maybe a cost of like what the institutional adoption is a little bit. It changed away from these traditional maybe halving cycles that everyone just expect here and they are coming out. So you have that, you have institutions on the rise and they're going to trade Bitcoin as risk on tech assets, and that education and kind of timing takes effect on a lot of people, new market participants here. And then I think also that you have a whole other, you know, conversation stuff that we write about and talk about is like this liquidity that's been with risk assets for the last 5 to 10 years, that's been injecting liquidity in the market. Everything's performed that way. Bitcoin's correlations at times have been so incredibly high across whatever, you know, kind of high beta growth asset you want to look at. And so now you get to a point where all of that's cooling down with rates rising, growth, kind of deflation on the horizon, kind of growth outlooks getting less and less. And it's just not been 2022 is shaping up like a turn of year to just not be a favorable time for risk on assets or Bitcoin. You need some like exceptional Bitcoin catalyst to come in and really turn that narrative around, and just market dynamics of how these things are correlated with other risk on assets and yields. So yeah, I think now it's obviously the levels that we've been looking at to say, okay, I think maybe about 3 weeks ago, we talked about something like the short-term holder cost basis of like 46,000 level and saying like, okay, if Bitcoin could reclaim above this for some time and show some strength, that would be a good sign that like maybe there's a bit of a specific Bitcoin market kind of divergence happening here and didn't quite get that. And now, our base case is that there's more downside that's coming for, and it's not necessarily Bitcoin specific, it's just more macro market specific. And I don't think Bitcoin can kind of get away from that, but it's more of the bullish case we have kind of post that downside for the asset itself.
I'm not going to ask you the question that you told me not to ask you, but I want to talk to you a little bit about what we're seeing coming out of the Fed. It seems as though the markets are dictating to the Fed to be very aggressive with their rate hikes. I asked you a few weeks ago, like, what would it genuinely look like if we just ignored what the Fed did and let the market dictate these rates? The Fed's just going to respond accordingly, I believe. I'd love your thoughts on sort of where your expectations are for Fed rate hikes and what effect that could have equities and Bitcoin market and bonds as well.
Yeah, totally. So I would say, yeah, even if the Fed is behind the curve and they're not raising rates and the market is doing it for him, you're seeing a sell-off in credit on all sorts of durations in terms of like treasury and kind of high yield credit. And, that could be a good function of that inflation is where it's at and you see these negative real yields. But you're not really seeing that like safe haven treasury kind of asset play that's been in yield so far. Now we're like up to 3%, I think close to it on the 10-year, like right below that. So we'll see if that holds or there's more sell-off to come. But even without thinking like, okay, if the Fed is just signaling market rates or they're just like signaling broader monetary and fiscal policies that can happen in the future, still markets are kind of they're raising rates a little bit, but they're also baking in expectations for these rate hikes anyway, whether they have a huge material impact or not on the market. So, currently right now, the May 4th meeting is coming up, and I think mostly what markets are pricing in is 50, basis point rate hikes through the rest of the year for almost every meeting, maybe a little bit shy of that. And that gets the Fed to this, have an idea like the terminal rate in mind and like the rate that's, meant to be met for, proper growth and inflation, whatever that means. But ultimately, I think what you're going to see is that, the inflation problem is just too much of a concern politically. So even if you're saying like, okay, the Fed doesn't have, much impact on these market rates, the market's doing it for them, I think they have to show whatever monetary policy steps that they can to show that they're kind of fighting into that. And that's really the bigger concern because, inflation at 40-year highs, you have 40% of Americans that essentially have less than $1,000 in savings, where that's really hitting the most. So I think, in this reality, they don't have too many options, but to try and take that away. And try and take that liquidity away, although maybe they should have done a long time before. And then eventually you get to a point where, the kind of our base case is that, or mine is, that as this unfolds, you're taking that liquidity out of the market, a market that's grown largely based on that liquidity and other factors and speculation. And then you're just completely removing that. We're trying to roll down the balance sheet, trying to take out, trying to have more quantitative tightening and that's more downside for risk assets to come. And I think, obviously May 4th, will be a good signal. Like if 13% in the SPX and 20% in the NASDAQ, I don't think that's enough to say that the Fed is just going to like start reversing course now. Would expect that to play out much later this year after they're tightening, almost because they have to at this point because it's catching up to the market.
We've heard Powell essentially allude to this 50-point basis hike, possibly two back-to-back. I believe it was Canada that actually just did a full 1% rate hike on their own markets. Do you see or envision like things getting so out of hand that the Fed has to be even more aggressive than a 50 basis point hike? And what could be the events that cause more aggression?
Yeah, I would say, well, I mean, there's some members of the Fed, I guess, who are pushing that, whether they're just talking about it and trying to raise market expectations in that way, like Bullard has talked about getting to like a 3.25% kind of target rate. Again, that's 50 basis points and even maybe a 75 basis point rate hike through the rest of the year. I mean, the thing that would make them tighten further or have to really is just more acceleration rate of change in inflation, how I see it. And not to say that inflation is not here to stay in the US. It certainly is going to stay at high elevated levels. But I think we get closer to essentially that peaking, you know, the kind of base effects of what like inflation is built off of can only stay so incredibly low relative to the pandemic for so long. And the rate of change when you're talking about, okay, you have inflation at 8.5%, how much higher that can go into 9 or 10. So I think we get like maybe a reversal there. I mean, we'll see how the latest kind of supply chain data is taking forward within the last 2 months. But I expect that to still remain like pretty elevated, like CPI level, like 5 to 6% for the rest of the year. Although that's largely, you know, below what, you know, most people would expect CPI or inflation overall to be an estimate. So I think for them to really just go like Paul Volcker style rates is like you'd have to have this like persistent 8.5, 9, you know, 10% style inflation where they just say, okay, like 50 basis points is just like totally off the table. We have to go much higher than that. But then again, you get to the point where, you know, at the end of the day, like the conversation is how much higher can rates go to pay, you know, the deficit and the interest rate expenses that we have. And so eventually like those have to have some type of ceiling or cap to, you know, kind of be able to afford instead of kind of going through these austerity measures or kind of going bankrupt on the debt itself, which I think are politically, you know, not viable options.
Sam, did you get a chance to watch the IMF panel that happened last week? I believe it was late last week.
No, I think I saw some clips of it surfacing. No, but I didn't see like.
You should take a look. It was interesting. Yesterday on FedWatch, we talked about it in detail over here on the show. So folks can catch that on FedWatch or on Bitcoin Magazine YouTube. But it was pretty much a panel of central bankers, and they were just talking about, you know, a lot of these questions that we're kind of asking you. But when Powell was asked that question, he actually let loose that within the inner circles at the Fed that a lot of the decision makers or the influencers feel that, you know, quarterly 50 basis point hikes are appropriate and on the table. So that was some interesting information. So I know that, you know, obviously 50 basis point is not massive, but, you know, obviously FedWatch, we've been saying that the Fed only can manage impressions and manage expectations. And that's really what they're just focusing on here. I guess, do you have anything to kind of add to that kind of information?
No, I mean, I think I would say like, you know, kind of what you're hearing in terms of that panel or like what Powell is saying is that like, that's essentially what markets are pricing in today as well. And essentially that it shifted in the sense that, you know, the sentiment is to focus on inflation and signaling that you're trying to do that, whether you're having an impact on those rates. And so when you look at like the CME, they have a great like rate hike probability tool where you're looking at kind of based on what market positioning is and certain data in the market, here's what is essentially implied for what the market is expecting. And so I think over the next few meetings, that rate hike probability is expecting, 80 to 85% chance of those 50 bips rate hikes. So, I mean, that leads me to believe that there really is, this is the path that we're going down. Essentially just going to continue doing it until that ends up being some bigger liquidity crisis in the markets, if that's to play out, or leads to some kind of recession, deflationary impact that has to come after kind of this inflation force today. So as much as like Fed talks and says that, with what you just said and like what I'm looking at and seeing in terms of like just the market data that's on the table today, that does change a lot though. Definitely confidence that over the next like 2 or 3 quarters that they're going to consistently try to rate hike basically until something doesn't work or markets get to the point where you might say it's like the Fed put where the S&P is down, another total like 30%. And that really is the time when things are breaking worse. And so that's when they have to reversal. But I would definitely agree that or be convinced that that's happening, even though I haven't been as convinced on kind of like Fed speak in the past.
I'm going to space on what exactly you and Dylan have been posting about, but the metric regarding coins on exchanges, I believe, or coins that have not moved is reaching new all-time highs. Can you touch a little bit about just sort of correct whatever I just said that was wrong, B, sort of explain to everyone why that metric matters and why you guys are paying such close attention to it?
Yeah, so maybe you can help me clarify what you're thinking. So you have balances on exchanges, you have coins on there, or you have like coins that have not moved over like a certain time period. So like that one. Okay, cool. Yeah. So basically, I think what Q's referring to is like coins that haven't moved in addresses and wallets over a certain amount of time. And so, one that we track a lot and just in terms of like general holding behavior is like coins that haven't moved basically over the last year that have been sitting there, which are good kind of holding indication that one, more kind of holders on the network are like growing their share of coins there. And new people that are coming to the network are holding coins for like a longer time period. So if you look at that metric right now, that's like around 64%. So it's hitting like these new kind of all-time highs. A big piece of that metric too, though, which is, if you're looking at like the holder activity, the more active people, you like to see that number kind of increase because it's kind of showcasing like through these more bearish markets and things that are happening, more people are holding coins for longer and there's not enough selling, and you're going to have this period of like hodling behavior that's got to stick around at pretty high clips through this kind of monetization phase that we're going through. But what's also rolled into there is that coins that basically haven't moved in like 7 years as well. And so we consider like a lot of those coins either lost, those would include Satoshi's coins, but coins that have not moved in like 7 years, you're expecting most of those to not come back to the network. They certainly can. There's been cases where that happens, but for the majority of them, you're expecting them to kind of be gone and maybe just a donation to the supply that's there today. So, what's been happening with those is like a lot of those coins just aged into like older than 7 years. So that number has been getting pushed up pretty high, which is a good indication of holder activity. But like right now too, it's more so driven by a lot of lost coins in the network that are kind of aging past there, which it also is like a pretty strong case for just, another kind of variable on Bitcoin's kind of limited supply. Like when you think of like, okay, 21 million supply, there's estimates for lost coins that put supply more like 15, 16 million. And then you have this other dynamic that's happening like every 5-7 years, you have an assumption that coins that are not coming on the network are basically lowering that supply as well. So not saying in the future we can see some of those come back, but it's a pretty indicative of like the supply side things that we talk about, just being one of those metrics that say, hey, even during this period down 44%, whatever it is, we're from price all-time high, that a lot of the hodling behavior of people that have been around for a cycle or even over the last year, 2 years, is really not changing all that much. So that's promising from a supply side, which leaves like less Bitcoin on the market to get influence from like more of these macro trading, kind of credit unwinding, position unwinding type moves.
I'm going to start calling you Randy Moss.
What is that?
Because he caught the worst throw that this dumbass ever threw in his life.
All right. Well, yeah, that's fair. That's pretty bad. I want to hit on something that you wrote about last week, which is interesting because this is the first time that we've started to see this happen in a while. But GBTC, the discount is starting to shrink. So effectively, this is the story. Am I? Hello. Can you guys hear me? Okay, maybe Q can ask. I don't know what's wrong.
DK, just start talking.
Yeah, no, I was just gonna say, I wanted to ask about the GBTC premium and it's shrinking.
Yeah, totally. So we wrote a piece on this essentially through last week, and this has been something, essentially GBTC, we got some good pieces on this, just being like a huge driver of the bull market that played out. GBTC taking on a huge amount of Bitcoin. Now their holdings are over 650,000, 640,000, somewhere in the ballpark there. And then you had, just in terms of like the premium discount, when you had that going on, you had basically people being able to arbitrage the price between the shares that were kind of locked up and traded on the market. And so for a while, there was this huge premium that was trading on GBTC. And essentially, as price fell and demand has fallen, and there's other vehicles that have popped up to get Bitcoin, there's been a large discount rising there. So, for holders of GBTC, like over the last 2 years or so, there's been a huge discrepancy in terms of like Bitcoin returns versus GBTC returns, because you have like this big prevailing discount, like in the going market rate price, and essentially what the share should be relative to the price of Bitcoin and what it represents, just kind of by the nature and structure of the vehicle. And that's why there's been such a demand for a spot ETF as well, because this is a huge institutional investor product. This is one where you can get, outside of mining that we talked about before, like the exposure to owning Bitcoin, actually, for a lot of people, a lot of institutions, but those returns are pretty significant. So like with this regime of discount reaching down to like 30%, you have these like Bitcoin returns like over the last 2 years, checking it now, it's like 470% return on Bitcoin. If you're holding GBTC, it's like 260%. And then if you flip that since 2021, essentially you have a return of 24% on Bitcoin and like negative 18% on GBTC. So, but now what I think of like this discount at 30% has been an interesting like new investment case for investors to want to get Bitcoin exposure, because essentially what you can do is you can scoop up shares of GBTC, which is trading now 23% below, so that's closed a little bit from a 30% peak. And as that gets closer to a spot ETF vehicle being proposed or transitioned here from this trust vehicle from Grayscale to a spot ETF, you're going to see that discount close. So essentially you're getting like this additional upside on Bitcoin if you're buying into this discount and it closes into spot ETF. So obviously Grayscale's had a huge marketing push, potentially like, putting out a lawsuit, depending on, I think there's a decision on July in terms of one of their applications. But what this kind of premium discount kind of also represents, it's interesting in the market, is just, it gives like implied market probability odds of when this thing might start closing or get closer to a spot ETF. So I think that's, one of the parts of the piece we said interesting to watch. I think still we're probably far away from having that spot ETF approval. Some really great Bloomberg ETF analysts that have covered everything Bitcoin ETF and ETFs in general kind of benchmark some of the kind of legal concerns to get hashed out by summer 2023. Could be sooner than that. But I think that's why this is such an interesting kind of premium discount to watch, because ultimately as the odds of this gets closer to being a spot ETF, you should see that premium close as more investors start to come into this trade, and maybe that conversion of a spot ETF risk gets reduced.
Can you guys hear me on Spaces? All right, there we go. That was my bad. Sam, really great information. We hit on a bunch of stuff. We focused mostly on the state of the Bitcoin mining industry, public Bitcoin miners, talked about Bitcoin market outlook. Are we in a bear market? Answer is kind of maybe, probably yes, but unwilling to commit. And then finally talked about GBTC and some of these other outlets. Anything else you kind of want to add as like a final word? And let's make sure to tell people about Bitcoin Magazine Pro.
No, I'll just say, if you like any of this type of information, whether it's hearing it or through more writing and charts and data, check out Bitcoin Magazine Pro, Substack link there. You can sign up for kind of a free subscription, or we also have a 30-day trial promotion there if you're interested in the premium. But yeah, I mean, everything we cover from Bitcoin mining, macro, derivatives, on-chain analytics, try to be full encompassing. So yeah, if you're into that information, check out Bitcoin Magazine Pro or give me a follow on Twitter.
BitcoinMagazinePro.com. We got to make sure we practice saying that one, but we got that shiny new domain as well, so that'll take you right to the right place. BitcoinMagazinePro.com. Last words, Sam?
No, I think that's it. Thanks guys for having me again. Appreciate it. So talk to you guys next week.
Cool. Chris, Q, always a good time. I'm still bullish. Mirror multiple is below 1. That means you should be stacking. And I mean, hey, just play it safe and never stop buying Bitcoin. That's what I have to say.
We want to go to commercial? Or are we going to? All right, we're going to a commercial break, guys, so I can eat a banana. We'll be back. What is up? We're back. We're still here. Hour number 3. What you don't know is we're going to hour number 4. No, I'm just kidding. We just wanted to remind everyone to make sure you go. If you did not already, make sure to go buy your Bitcoin 23 tickets. They are on sale now. Pre-sale ends on Friday. These are the cheapest tickets that are going to be available. $250 for GA, $5,000 for whale passes. Industry passes will get rolled out at a later date. But in the meantime, guys, you're going to want to be there. All the FOMO that you guys had from everything that you saw, all the clips that we've been posting, all the conversations that you're hearing about it, you want to be there. I know you want to be there. It's going to be in America at some place, somewhere. Right, CK? USA? Oh,
it's going to be. Oh,
I told you.
We're not supposed to talk about anything. So, but yes, we're an American company. We're doing things here as far as I know.
All right, cool. See, I feel comfortable saying that now more confidently. But look, there were not 25,000 people in Miami. You guys flew to Miami anyways. You're going to fly wherever we tell you the Bitcoin conference is. So why don't you just buy the ticket and then trust us that we're going to put together a bigger, more awesome, more epic event next year? Because let me tell you, the things that P is already cooking up, that's it. That's all I can say there. Alex, any words on the conference?
Yeah, get your tickets now. This is a great investment in yourself. And I don't know. It'll be a great experience. I'm sure there's a lot of people out there listening who are experiencing a little bit of FOMO, but I will say one of the highlights of the conference for me was meeting people that have been watching our stream in person and just being like, wow, you're a real person, and hanging out with them. It was super fun. So we'll definitely do that again. Love to kick it with you guys next time.
Yeah. I think also though, maybe we might try to come a little bit even earlier to have more downtime versus all of the pre-prep time. So shout out to everyone who did come up to us. I know that we were a little chaotic at the news desk and weren't always free to take pictures with you guys, but we do genuinely appreciate it. We still like, we have egos. We like the egos to be stroked. So thank you guys for doing that out there. Special shout out to the man behind all of the scenes though, Chris, making all of our streams happen. But like, dude, how many miles do you think you scootered around that venue in Miami? More or less than the amount of miles you scootered when scootering was a viably acceptable mode of transportation when we were like 8. Love that. And one last reminder, this shirt that you see us wearing and a lot of the other conference swag is available on our store for a limited time only. Use promo code FOMO. Oh, McShane's taking his shirt off again for us. You're muted.
Damn, we got the SMF swag still.
Yeah, honestly though, Chris has the best Sound Money Fest swag by far. If you're not a bucket hat guy or girl, grab that windbreaker. It's nice, it's convenient, it's waterproof. Like, you're gonna get so many uses out of it, and like, rep the first ever and the coolest ever Bitcoin music festival that ever happened. I mean, I'm still having rollbacks. Whoops, did I say that? Use promo code FOMO, get 10% off of all products at the store, including the book that we talked about with Jay Gould that he said was required reading for everyone. Check Your Financial Privilege. 10% off. This book is available, as well as the latest issue of Bitcoin Magazine, the Moon Mag. Get your subscriptions, get your copies. You know the drill, guys. We'll be back tomorrow, 1 p.m. Eastern. Stay humble and stack sats.